Funky, y'all. Those calls.
What up? Cheers, everybody. Happy Friday for the few of us willing to do some stock research on a Friday night, right? Crazy us. Actually, it's nice to take a little bit of a breather on the GameStop craziness, huh? It's settled down a bit. Of course, we'll talk some GameStop today. The update, like I was talking about all week, the importance of where it was going to end up by the end of the week. So we'll touch base on that. But what's happened since the last stream, right? The market's kind of sold off a little bit. Oh, you know what? I haven't even looked at S&P 500 chart yet. But this is important, right? Because this is relevant. Everything's relevant to GameStop these days. Right? I can tie everything back to GameStop. Try me out here, huh? But I was thinking about that. First of all, I did add to GameStop in the wrong kitty portfolio. I did it today, but this is the sell-off's helpful, right? First of all, this GameStop has stabilized a little bit here. And so I was talking about the importance of where it's going to end the week. I don't know how everyone else feels about this. I'll be asking people here how everyone feels how it ended the week. And I find it, and I tweeted about this too. This is not super bullish, but this is a bullish end to the week. I mean, it depends why you got involved with the stock in the first place, right? Like I said, there's different ways, there's different plays within a portfolio depending on what your play is for GameStop. Some people may be disappointed that it kind of just stabilized here a bit for a couple of days and didn't keep on going up, didn't continue going parabolic. That's not my play. And my play is, I've been involved with this for a long time. There we go. Hyperbole Kid is just that GME held strong. And that's kind of what I'm getting at here, is that it's important for a younger me would have kind of overlooked this type of thing. And it's important not to read too much into this stuff, right? This is all marginal analysis that we're doing. If you're curious about the fundamental case for GameStop, right, check out the other videos, right? The videos, and I know we talk about it on the stream and stuff. That's the thesis. That's the longer term thesis. So this shorter term stuff, when I'm tweeting about it and all, whatever I was, I forget what I mentioned in the tweet, but this is marginal stuff. It's like bolt-on. Like, all right, let's take a peek at this. Let's see how it's going. And then because we're trying to validate the move, right? And so just that's a reminder for everybody. I don't tweet about that stuff very frequently, but there's not much else going on with respect to GME. So I'm like, let me keep an eye on this. What the hell did I say? Legit. I know I was talking about how the very short-term move, and that was yesterday, right? Yeah. So what I was saying was this pertained to today too. I didn't dig into the numbers. I wasn't paying attention. But how the S&P 500 and the Russell were down, and GME was holding its own. And then it went green on the day. Didn't it go green? Yeah. So this is the thing, is that this is important because relatively speaking, it held up well to Hyperbole Kid's point. And this is another reason this is important, is because I talked about come the end of the week, it's going to really matter where it ends up. It's going to be more important where it ends up because of this chart. If I back out just a little bit and you see this week chart, this looks really good. To end the week at this point after it went it was the first 2 days, right? It was those first 2 days where it really went up aggressively, right? Boom, boom. And then maybe people who are bearish on GameStop, this is a fake move. This is a fake out. Don't fall for it. This is why this sounds weird. Let me know if you agree with this, but I kind of like the pullback on the market. It turned out to be pretty solid timing because you got to test, if you're short, not even if you're short GameStop, but if you're not long and you're just trying to keep an eye on it to see if it's going to keep on moving, like, you had a perfect opportunity for it to pull back. It was right there. That's why I made that tweet yesterday. I'm like, here you go. If this is a fake out, if this isn't legitimate, this is a perfect, legitimate opportunity for the stock to come a little bit back to earth, even come back down to this 650 range, $7, like retest a little bit. That would have been perfectly normal, so the technical analysis books say. And remember, this is what I'm talking about. This is marginal analysis. The thesis is the fundamental case. I can't stress that enough. But this is why I try to pay attention to technical analysis more, because I think this is how other people are thinking about it. And then Daily O'Brien, happy Friday, Kitty. Great finish for GME this week, in my opinion, Daily. Cheers, Daily. Thanks so much for tuning in. I appreciate it. Happy Friday to you as well. And Daly's echoing hyperbole kids thing. I'm happy people are saying this. GMA held up strong. That's the takeaway. But you can understand how day traders might be like, hey, it stabled off here, right? We don't think that, right? And those people wouldn't be tuned into this stream. They have a different style of investing. But as far as we should be concerned, that it did hold up well. And so this is why it's important. So you back out to the week, and I'm like kind of excited about this because here we go. It didn't even pull back to the 657. And where's that S&P chart? Like here, you had a great opportunity. It would have been perfectly acceptable from the technical analyst point of view if it came back, and it didn't. And I'm like, this is sick. So I added today. I'm like, here we go. This is what I was waiting for. And actually, I saw it. I was right there. I saw it drop below 720. I'm like, this is it. Time to add. And by the time I got the order in, it never came back to 720. I put the buy order on at 720. I'm like, I just missed it. I always do that. As soon as I always like, all right, here it is. So let me pull up this chart. Remember this chart? So I posted this chart, and I was keeping an eye on this today because I'm like, you know what? This is looking like it's going to end up solid with the market like kind of selling off a bit too. I'm like, this is holding up really well, so it's time to add. And remember, that's not a recommendation for other folks, right? It could even be that GameStop's not a good fit for you. But in my case, and this is what I've been saying on the stream too, the play here for a style, an aggressive style like mine, is to add on this what I consider a breakout. You add on the breakout. The only reason I don't even add more is just because it's already a large position. But this looks so good, you got to add on the way up, especially because I think there's not you, but as far as the Roaring Kitty portfolio goes, the strategy is to add on the way up. And so I kind of dragged my feet a little bit because, like I said on the stream, I'm just watching what's happening here too, and I want to see what it does. And then when the market's selling off, I'm like, this is perfect. This is what I was tweeting. I'm like, you got to keep an eye on this, even if you don't do anything, but watch what GameStop does relative to the market. And then it held up, and I'm like, perfect. And then it never, so it did dip a little bit below. Remember I had this chart, and I'm like, let me keep an eye on this. Bear in mind, I don't know what I'm doing. This is just something I'm keeping an eye on. I'm like, let me see what's happening. And it was like, boom, 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 boom. And it's like held up really well. There were other stocks too. And I'm like, what are other stocks doing? It's not like every stock sold off hard. It looked like small caps kind of held up pretty well. And Hyperbole Kid said, I did buy in further when it hit lower sevens. Congrats to you. If you were keeping an eye on this too, this would have been helpful so as it turned out. But props to you. That low sevens is looking like it could be a good opportunity to buy. And Hyperbole Kid also asked, was wondering if Cohen is still buying in daily up until earnings. We all are, right? We're all wondering that. Yeah, I made that tweet a couple days ago that it looked like there might be a standing buy order coming in all the time. Maybe not even just him, but other folks too. Like if you're short or whatever, you got to just toss that buy order out, gobble up the shares. It could be him. And I did a little bit more research. I mean, we were talking all about when would he have to file if he buys up more, right? We talked at length about a lot of people talking about that on Seeking Alpha as well. It's a really important discussion. And what it appears to be the case, what it appears to be is just a heads up is that at this point he owns 9.6% as far as we know. Even if he gets to 9.9%, he wouldn't have to file because that wouldn't be a 1%. That's not 1% of the shares outstanding. He would only need to file an amendment if it was more than 1% of the shares outstanding, which 9.6 to 9.9 is not. If he breaches 10%, if he breaches 9.9% and he gets to 10%, what he'll have to do is file a Form 3. As an outside shareholder who owns more than 10%, he needs to file a Form 3 to say, hey, I'm officially an insider now, right? But he has 10 days to do that. And I know lots of people have been talking about that. But it's that Form 3 that I have like, oh, yeah. They need to do the Form 3 first. And thereafter, it's Form 4. Form 4. They file the Form 4 just like we just saw this with Xerox, right? With Carl Icahn. You file the Form 4. You're just like you're an insider. Then you have to file the Form 4 every 2 days. So you have the transaction, and then you file 2 days. So he's not at that point yet. But the next time he files, if he files anything, it would be, I believe, it might be an amended 13D first, but he would need to file a Form 3, and that he would only do that if he breaches 10%, which depending on. So I'm going to have a question for folks, which I'll get to in just a minute, but let me just yeah. So this looks so anyway. It held up well, and so this is another thing. So I made a list of all these things. I've been mentioning this on the stream. So we get the fundamental case, right? Which I've mentioned. We all know the fundamental case, but now you get it ended the week. It hit a 52-week high this week. The chart looks great. It's going to hit. People are going to do their weekly. I'm talking about technical analysts here. They're going to do their weekly review of which charts looks good, and then what they're also going to do is a comparative analysis. Which stocks held up well in this sell-off? Just like we're noticing, everyone's saying here, hey, GME held up well. Now other people are going to notice that too. So that relative performance, relative strength, if you will, whatever you want to call it, doesn't matter. It held up better than the rest of the market. And in addition, it was a perfect opportunity for it to sell off and give back its gain, and this didn't. So this is this is what I'm talking about. You know how I always talk about how I'm worried about confirmation bias. Here's a perfect example of am I just seeing bullishness wherever I want to see it? But I'm being as objective as I possibly can. Reading the tea leaves still. This is why I say it's still marginal analysis. Make no mistake. It's not like the stock couldn't pull back on Tuesday. It absolutely could pull back on Tuesday. That's not the point. My point is just that what's unfolding here, what limited more information we have of Thursday's price action and Friday's price action. We have nothing else, right? That's what we have of. But that price is telling us, hey, heads up, the market's kind of substantiating this. And now I think other people are going to take notice. And that added variable now is that GameStop held up relatively well. And I even noticed today, too, I don't know if other people noticed this, but if we pull up Seeking Alpha, there was an article today. Well, there was another one of those options article that those are pretty good articles, by the way. Where was it? Seeking Alpha Catalyst Watch. Did anyone see this article? No, wait, which article was it? Was it this one? I don't think it was that one. There's an article out there where, what the hell was it? Was it Seeking Alpha? Where they talk about Catalyst. Maybe it's this one. Maybe it is. But they talk about GameStop is listed as a top performer. Where the hell did I see that? Anyone see that? It was somewhere. But it said GameStop was a top performer, like the top 100 stocks, relatively speaking. Again, nothing to do with the fundamentals, which is what we're all here for. But I'm like, it's already hitting people's radar. It's hitting people's radar this week. And it's like, now I think it's going to start, people are going to even more start to notice. I think. This is why I bought and whatever, and I'm just trying to be objective here. It could still pull back on Tuesday. It could pull back into earnings. Maybe people think it's overdone. That can absolutely happen. I'm just saying, so far, what I saw these past couple days was slightly more bullish than bearish, and especially because of this pull. This is a big pullback. It looks like it's coming back to a little bit of support there, I would think. Hyperbole Kid asked, "Is it true that Sony is having a PS5 announcement on the day of GME earnings?" That appears to be the case. As far as I can tell, it's a rumor, but it's But I looked that up again today, and it says September 9th. I saw it some another website. It looks like September 9th, but I think it was just a rumor. It wasn't like an official announcement, which is kind of weird, right, for Sony, because it's a couple days away, right? So I don't know, but that's why a lot of people are talking about that, is that GameStop did it on purpose. Again, it's just a rumor. They couldn't, maybe not, but they did it on purpose. Like, it would be completely like dropping bombs on everybody. Like, here's a PS5 announcement, here's the earnings release, and maybe some other positive news along those lines too. And you could, in theory, even get an updated 13D and or Form 3 from Cohen, in theory. But okay. I do have a question for folks. What the hell? Did I have anything else I was going to say there? What does anyone here think that Ryan Cohen and RC Ventures is going to try to buy out GameStop outright? Does anyone think that? I'm super curious about this. So I've been giving this more thought because, like, we talked about the that article that came out today, right? These options, this options related article, and as I recall, these are good. I recommend checking out these articles. It's a unique take on the GME. There's so many good Seeking Alpha articles out there on this, but this is a unique angle in that they talk about options. But in that first one, he did a pretty good job covering a lot of the thesis. But in this one, I think, if I recall correctly, he kind of gets to the out of the money, deep out of the money options, right? But one thing to bear in mind is if there were to be this is why I asked this, if there were to be an outright takeout of the company, or an outright purchase of the company, you got to be careful of what that price might be. You know what I mean? Hyperbole Kid, Hyperbole Kid says yes, or at least a strong strategic partner. You know, but it matters whether or not. So so a couple of things I agree. First of all, as a GME investor, I imagine that there's much more upside if it stays public and no one takes it out private at this cheap price, because then it kind of caps the upside for OPMIs like us. If you're an OPMI. You don't really get to, and it gets taken private at 12, 13, 14, 15 bucks, whatever it is. You don't get to reap all the upside. This is why companies are taken private. But this could also feed into the whole short squeeze narrative. I have no idea. I mean, I have no idea if there were a buy. Let's say there were a takeout offer, right? Where are you gonna get all the shares? Where do all the shares come from? You know what I mean? I can't stress this enough. This is above me. I don't know. But they wouldn't have to track them down, and then you see how much the fund zone of GME, right? Wouldn't they? Let's say there were a takeout offer. Don't they automatically vote yes like that? So that's just something I was thinking about, because I didn't originally think he was going to buy it out. I think I even said that on the stream. Like, I lean toward he's not going to buy it out. He has no history of that. His experience was kind of co-founding companies and stuff. But then I'm like, damn, would he? And I talked to some folks. Some folks don't think so, but some folks do. And I'm kind of it's something to consider, especially in the context, in particular, of this article. If you're doing out of the money calls, it's just something to be aware of. Hyperbole Kid, I think one of the board members is a chief from PetSmart, and they bought Chewy. No, right there. Yeah, so he's got a. I mean, I don't know if they're friends, but they're. Yeah. Pets and gaming, Eagle Fanatical. Yeah, so there's a lot of overlap there. I sent out, hey, Hyperbole Kid, check out my Twitter. I posted a whole bunch about that. You're spot on. There's a lot of comparisons there between Chewy and GameStop. It's the same exact. You replace. Did you say that? Replace pets with gaming. In his interviews, it's the same thing. It's the same game plan. But anyway, just one thing I was thinking about. I still lean toward it's not necessarily likely a takeout, but something to consider, especially in the case of options. But the stock still looks like a buy for the Roaring Kitty portfolio. Not necessarily for you, right? I'm always going to say that, but it still looks super promising. I'd have to say, my perspective for what it's worth, and again, for my style of investing, I'm kind of as bullish as I've been on the stock. I mean, because I feel, and again, Ryan Cohen hasn't solved anything yet. That's why I say there is some legitimacy. There should be some short interest in the company. There's no guarantee they turn it around. But now I feel as though, like Ryan Cohen's involvement, like there's going to be a legit. We always talk about that vision. I think I mentioned in my videos too. Like someone needs to just put together a narrative that there's something here, and the stock price should even potentially quickly revert closer to fair value. And I think Ryan Cohen has the. Can do that. I think he can. After we did that research last Friday, a week ago today, and after seeing all that stuff, I think he might be able to change that narrative in short order too. And so now I'm like pretty bullish. Now, of course, it's almost doubled. It did double, right? Yesterday it went to 850, didn't it? Didn't it go to like 850 yesterday? That was kind of crazy. Briefly, like in the morning, yeah, 845. I was like, oh, and then it did end green, but like that's bullish. That's good news. And so look how overbought this is too. If I back out on the daily, how overbought is this on the day? Look at back 8 years. Look at this. Look, oh, sorry, I'm in the way. Look at this. This is over 8 years from 2013, the last call. It hasn't been this overbought since the last consoles. And and again, this isn't our usual strategy. This isn't the Roaring Kitty strategy. But this, I'm telling you, people care about this. So the books say this is going to hit people's radar. Our stock being this overbought in a chart that looks like this. I really lean toward predicting short-term stock moves, it's a fool's errand. It really is. But if I had to, and you're like, what's it going to do next week? I have to say it's going to go up. I feel like it's going to go up into earnings. It's just that's speculation. I mean, it's pure speculation. But the way I interpret these types of things, trying to read the technical analysis as best I can. Again, I don't know what the hell I'm doing, but I think that this looks really, really good. And then if we back out to the weekly, I just got to see this. I didn't do it yet. Okay, so it just barely is kissing that, but it breached it, and it breached 70. The overbought territory is 70, and if they got some technical analysts, they put it in a screener and they say which stocks hit overbought for the first time this week. This is gonna look. It's not hugely overbought on the weekly, right? But it got there, and that's why I think that you're gonna see some follow through, and then if you have the quarterly earnings, I mean, everyone's not talking about the quarterly earnings. What are they gonna announce? And then if they just finish it off here with some a beat, well, they're gonna have some. I suspect they're gonna have some positive earnings from if they did that sell leaseback. I assume that was at a gain, but they'll adjust for that. And I don't know how the market will interpret that. But then the additional cash and stuff. But then how they operated, that's what's important, right? And I don't really know. And I'm not going to take the time to come up with precise forecasts. I've said that. That's marginal analysis too that I don't feel like doing. Reading the charts are easy, or trying to read them. So that's what I mean. Then we're right up. Then we're in earnings. It's Wednesday, so then we'll have to see. But what I'll be keeping, I mean, how many times I say this? I'm keeping an eye on the share buybacks, right? But also, and I know everyone's saying this, keep an eye out for if Cohen files something. If he files something, he could just add to his position too. It's not like he has to take it private. Maybe it would be I think as a GME investor, I think the potentially optimal scenario would be if he added to his stake and he got a bit heavier in the position, but didn't buy it outright. I think that's what would probably be best. And I have to say right now that's probably my base case. That's what happens. But that's your guess is as good as mine. Really, it's not like I don't know much more than you've seen on this stream or whatever. I lean toward that seems the more likely path because buying companies outright isn't that common. And but that's the thing. He co-founded Chewy, so that's kind of his experience is running things. He gets more control of the business if he really wanted to do it. But he could also come on as an advisor, and he could be on the board too. But that's the thing, he could come on the board. I don't know. There's a lot of different paths this could take, and the only thing to do is to toss them out there, talk about them for a couple minutes, and move on. You go crazy if you keep on talking about it. Well, so that's all I got. That's all I got to say about that. But right, markets close Monday. I'm probably, just a heads up to folks. I'm not going to do this stream on Monday. So heads up on that, just because the market's closed Monday, right? I'm pretty sure the market's closed on Monday, so I probably won't do the stream Monday. But then let's see what happens Tuesday. Right now I was planning on doing the stream Wednesday too, but I'll be tweeting about stuff, so I'll be keeping my eye on stuff. I'm really curious about how it opens up after people digest this a long weekend too. Daily O'Brien, shorts have to be banking on bad earnings or something, right? Shorts still at 95%, unbelievable. I have no idea, Daily. Yeah, what the heck? I don't know. I've seen some of the figures out there that say the shorts have been adding or maintained. I don't know how accurate that is, and it's hard for me to put a lot of stock in that. I don't know. I see those Market Watch figures that they update, that I expect an updated figure in about 2 weeks. But this is what I mean. You see that's why I tweeted that. I'm like, I'm like trying to have some fun with this, right? But I can't imagine. I wish more shorts or someone even bearish for GME were more outspoken right now. Like legit, I wish they were outspoken or even critiquing my stuff. Like I wish they were kind of jumping back in there. Oh, and the other thing too. Sorry, wasn't there an analyst upgrade? There was an analyst upgrade. I don't know who this. I don't know who they are. It was somewhere. They upgraded from like 6 to 9 or something like that. That's another thing that will hit people's radar. You start seeing upgrades. It all starts. It's waterfall effect. It all starts happening and they compound and then it hits everyone's radar. And even though it's just an analyst estimate, which I don't care about, who cares? It doesn't matter. That's almost. I say marginal. That's almost negligible. There, you can't put too much stock into what they're saying. I mean, nevertheless, other people, it will hit people's radar. We talked about optics, right? The optics of this situation. Who was it? Steven was saying if they do something, or a couple folks said something, if they just do something small and it hits people's radar and people are talking about it, that could have a positive impact on price, because once people put their rose-colored glasses on, then it's like they just start seeing things in a different light. Daily Telsey upgrade 6 to 9. Yeah, so that's not a big deal for this thesis. It doesn't matter, but and just one more thing that could hit people's radar. It's crazy. And so that's why I interpret it as bullish. But we'll see. We'll see. You can't predict these short-term moves. When I say I lean that way, I'm like 55, 60, 65%. Not 100%. Nowhere close to it. Yeah, was there anything else? Yeah, so I'm curious about if you have what the likelihood of a outright buyout would be. It doesn't have any background in it. He wouldn't do it by himself. There'd be other people or firms in on it. But that's the thing. Like all these funds. So this is the thing too. This is the closest I've seen. So people talk about short squeezes, right? When people talk about short squeezes, everyone will use the VW example, right? They use the VW example, and it's because it's a storybook short squeeze on a stock, and it's just a crazy fundamental scenario. And whenever so many people talk about short squeezes over the years, not just GameStop, I am always thinking it's nothing like VW. VW is a very particular case where Porsche was getting involved with it, and they had some options too, and they were going to take it private. And then it turned out there was only like 6% of the float left, something real small. There was like a really unique situation fundamentally, where anyway, there hasn't been much similar to that. But I got to say, this is a little bit similar to it. I'm not forecasting. I'm not forecasting a VW type squeeze, but this is just because I can't understand it. Let's say there was a buyout offer. Even though I say that might not be the optimal case, but if there were. Where do you get all the shares from? Where do you? I mean, maybe these funds who have because they own so much of the company. These funds own so much, like 50%. They'd probably say yes, but they also have to get the shares. They're probably the ones who. This is the thing in my mind. They've enabled the shorting, so they might have a greater chance of getting the shares back, and they might. I don't know. But we'll have to see. I'm super curious. Next week, really. I can't wait to see how this unfolds for educational reasons, right? Talk about super educational, but as far as like the setup, I think I haven't seen anything like this before. But to Daly's point, yeah, let's say they are still at 95% plus. What the hell? How? This is what I mean. Where the bit I want to hear more about the bear case right now. Given the I haven't heard anyone trumpeting the bear case since the Ryan Cohen filing. It's like they all went silent. I'm not saying that they're wrong because of that, because but like I want to, and then in the context of the chart, and then is it just the same thesis? But I want to hear a bear come out and say, I'm not nervous about Ryan Cohen taking a stake. I don't care if he takes a private. It's like, if you're 100% short, 100% short interest is 100% of the float is short, you'd need to be concerned about a buyout, right? You need to be super concerned, even more concerned than people who own deep out of the money options, right? Because then you know what I mean? It's like VW type squeeze. You got to get those shares somewhere, and I'm still not sure that they could. Maybe they can track them down. I just don't know. I don't know, and so we'll have to see. We got to see how it unfolds. And if there's probably many more people out there, so much more knowledgeable that I don't know, but I assume there's many other people who do know how this could unfold, or whether or not a short squeeze is likely, or whether they can track down their shares. But it's hard to track down. Those types of people who know that information and can share it and stuff. Hyperbole Kid says, the folks I know who are bearish keep saying brick and mortar is main reason can't survive in digital world. And that's a legitimate bear case, right? That's why I say, but it's specifically the short. It's the remaining short. It's the short argument, which is a little bit different than like the long-term bear. You can be a bear on a stock and not be short. You know what I mean? Or especially at this level, that's what I was trying to say in my tweets. It's specifically the level of short interest that blows my mind. I'm okay with like 10, 20, even 30% short interest until Ryan Cohen like proves himself. But you can't. As far in the context of GME, one of the worst investments I can see right now as it relates to it, you can play it so many ways: long the stock, long options, play puts, short the company, blah blah blah. But is remaining short right now at 100% short interest of the 100% of the float, over 100% of the float. I think that is really risky. Like I would say, don't do that before I necessarily buy the stock. You know what I mean? It's so risky, and I can't imagine a human being on the other side being like, you know what? Yeah, this is a good trade. Yeah, let's keep this trade on. No, don't unwind it. It's gonna come back down, and it's gonna come back go down to zero. Like it could go up much higher before it goes to. Even if it does, even if you're long term, this is the kind of the short squeeze. Like even if you're right, even if that long term secular bear case is right, in the meantime, so much can go wrong. And that's what I mean. I wish the short figures that we have were totally up to date and I could fully trust them, but I don't. But if it were true and that they're still 95% plus, like Daly's saying, I don't know what to say. Besides, I was joking with it about the robots too, but seriously, what the hell are you doing? I don't know. Maybe they're right. They're not definitely wrong. This is what I mean. But I just, from my expertise, this is super risky, and I can't even imagine being on the other side of it, which gives my self comfort. Not necessarily you. You might not even own it, but. Rarely do I feel this uncomfortable about the other side of one of my positions. You see all the positions in the Roaring Kitty portfolio, right? Oh, we can check this. Oh, so you can see. So check this. So now it's up to in the Roaring Kitty portfolio. It's almost 30%. It's almost 30%. I'm gonna ruin my credibility if I'm wrong about it. Yeah. This is the thing. But what can I say? Like, and they always say you got to be careful going public with your picks and everything like this. But it's a manifestation of my conviction in the stock, especially relative to other plays out there, and especially the near-term catalysts that are potentially ahead. So now it's getting absurdly high. This is absurdly high. And I specifically said this Roaring Kitty portfolio, I'm trying to manage it a little bit differently. But I thought when I was just reading through everything the past couple of days since the last stream and stuff, I said my strategy is to add at this point, so I got to do it. And like you've seen some of these other stocks too, like PBF, like some of these other stocks look good, and but I'm like, I'm not going to add just yet. It's already a big enough position. But GameStop's a little bit of an exception. Like I am willing to, because part of it is because of how dialed in I am and my conviction. And so I made this note too. Remember we were talking about different types of plays in the portfolio, like in the Roaring Kitty portfolio, but even your portfolio. Maybe it's a momentum play, or you're super dug in, or maybe it's insider buying. Like depending on what the play is. You need to understand like why you're in it. So I was thinking about how so many people were asking about trimming the position, right? And like from my perspective, and I've been in this so long, what's the case for trimming? Or if not for me, if you have it in your trimming, like what's the case besides if you just bought in and you got a quick gain? I get that part, but let's say you've been invested for 6 months. Why are you trimming right now? Is it because you're afraid of a negative quarterly performance? Okay, and so you're just trying to lock in some gains? But this is the thing. My play is not for a quick I mean, looked attractive to me at $5 and $6. You know what I mean? It's at $7. Trimming right now is kind of, you kind of, I'm not saying it's a bad decision for anyone else, or even that maybe I should be doing it. But for me, it's like, that's not why I'm in this stock. I'm in this stock to go much higher, and nothing has happened. All that's happened is the price has gone up a bit. And it's hard for me to justify to myself that to trim right now. I can't, besides, just for the money. You know what I mean? Like, it gets in your head a little bit. Like, maybe I don't want to lose these. And of course I don't lose it, but maybe because I've been sitting on like losses on GameStop for so long that it was like, who cares? I'm like, what's another shitty quarter? And I'm immune to it. You know what I mean? Maybe that's it. But in that light, and then I'm like, who cares? I don't even care anymore. You know what I mean? Let's just drink a beer and who cares? So this play for me, it's hard for me to justify to myself trimming just to net a quick 10-20%. For other folks, it's a quick 10-20%. For me, it's nothing. I mean, it's nothing. It's the only thing I've seen is that it's starting to make a move. And even though earnings, and like I said, though, my guess, it's speculation, but I lean toward, no matter what the earnings are, no matter what the announcements are, I lean more toward it's going to be up the next day. And in this light, it's hard. But that's not to say I won't necessarily trim on Tuesday or Wednesday. Let's see what happens. This is why it's almost kind of a little, I don't want to say a good thing, right? But is it helpful for some folks that it like stabilized a little bit? Like you catch your breath and just kick back and just let me think about this some more, digest it. Sometimes things go so quick and you're like, I gotta go. This was like March and April. You're like, I gotta move. And now you're like, all right, let's just reassess. Let's look at the weekly charts. Let's see what other people are seeing. Take your time, review everything. And it's not, if it were at like 10 right now, maybe I'd be like, I should probably trim I should probably trim just because, you know? But it's an easy decision with it being mid-sevens. I'm like, I don't care. What was I going to say? So that was another thing I was just going to say. The play, right, is just you got to trust your thesis. Whatever your thesis is. If your thesis is already played out, you're like, I just want that quick 20% squeeze on the Ryan Cohen news. You got it. Props. Nice job. And you can sell out, and you don't have to worry. You don't have the same type of thinking that I do because you're playing it different. But for me, that was I just made a note that I wanted to mention that. Understand why the price is moving, right? Like it was a 13D. It was a 13D, and people were talking about it. Nothing else really happened. All this other stuff that happened over the past 12 months, I don't think it's been fully priced in yet. So it's hard for me to. I saw some people commented here actually. Sorry. Daily. When were they expecting to cover? It was $4 at 3 months level. I know. So I think to Hyperbole Kid's point, I know when were they expecting to cover? I think. If I recall correctly, when Barry wrote his letter, wasn't it like 60% interest at the time? And at the time, he was like, this is a crazy amount of short interest. He's like, this is a crazy amount of short interest. Now we're at 100%. I think what happened, Daily, as part of it, is more people piled on in the $6, $5, $4 range. I think more shorts have piled on. So, Daily, I think some of them aren't even sitting on big gains. I think they were betting on it going kaput. This is why I think there's some 100% speculation. I am so out of the loop here. There's probably some people who hear my commentary, they're like laughing at me like I'm such a noob. I'm such an idiot about this stuff. But like that's why I think like it's just I say robots. It's like just automated algorithms like doing it because I think they just made a calculated bet based on how this chart was looking, based on the secular risks and the leverage ratios. I know Barry mentioned that, and they just like put the trade on. And they're not updating. They're not like tweaking the model according to what's unfolding. In the Black-Scholes model, is like there's flaws with the Black-Scholes model, and I feel as though options were mispriced quite significantly. Like it's part of this. Do you want to talk about like robots and algorithms? Like I think some of the numbers they do bad with the tail risk. You know what I mean? And so I think a lot of them. I think more people piled on Daily, and then I think those original shorts were betting on zero. They were planning on this going bankrupt. Some people were talking about bankruptcy, which was always crazy to me. I thought it was so highly unlikely. The company had way too many levers to pull. Really bankrupt companies, it's a different type of a balance sheet. I've seen it so many times. I've been invested in it so many times. And I'm like, it would be highly unlikely that they go bankrupt. So that was part of their thesis too. So I think they were betting on zero. They still might, and the thesis is the justification for remaining some short, like I said, some short interest would make sense to me is because it is a longer term zero that people are thinking that. But you can't. What are you going to hold it for 5 years, 10 years, get that zero? That's what I mean. Will short join this stream and start yelling at me? And will you yell like join the stream and tell me I'm crazy? Like I want that. Hyperbole Kid. When Sony and PS5 will have a version with this, it freaked out those bears. You thought? No, that's what I thought too, Hyperbole Kid. They announced that in June of last year, didn't they? It was announced. It was announced at the same time GameStop was creating that they're going to have discs. And even that Microsoft that Microsoft exec came out and goes, "Oh, millions of people want disc," and the shorts went higher. The shorts went higher. They didn't care. This is why I included it in the video. I'm like, are people not reading it? Like, are you that confident? You got Microsoft talking about how millions of people will still want discs. They formally announced that the consoles are going to have discs. And then some people have been mentioning that these are good points too. These games could be. There's so many reasons that people might continue buying discs, right? That like they thought it was going to be that there would have been a legit case if there were no disc playing consoles. Then I'm like, I might not have even got in. I probably wouldn't have even got into it. The case of bankruptcy would have been much higher. It would have been much tougher to turn around, but because they have discs, and I think they're going to be around for a couple of years, this gives GameStop the opportunity to reinvent itself. Whereas without that, they might not have been able to reinvent itself. They might not have gone bankrupt. They still had enough levers that they could like maybe cash out or something like that and stabilize stuff, but it might not have been huge upside. But once they announced they had the disc, and then the short step going up, I'm like, what is going on for what is it? Almost a year now. I feel like I'm taking crazy pills. I feel like Anyway, but maybe we'll know soon enough. I feel like the long thesis for GameStop, it needs to be quite a bit higher by the end of this year or in the next 6 months. It needs to be quite a bit higher. There's something off here. You know what I mean? Like it was always part of my thesis that it needs to the console cycle. The new consoles need to. I don't mean act as a short squeeze. The short squeeze is never a major part of my thesis, but that it needs to catalyze interest in the stock, that it at least needs to bounce. And if it doesn't bounce, even with the consoles and everyone talking about it and stuff, that's a tough environment. So it at least needs to go higher on that front. But yeah, now I'm rambling. I know. Future Hyperbole Kid says future guidance from GME on earnings day is key to what reaction and stock price will be. You think they're going to give well? I mean, I don't know what guidance they're going to. They haven't given guidance all year. I don't know. I don't know why they're suddenly going to be able to give guidance. What more do they have? They did give liquidity guidance, right? For a this upcoming quarter, they were forecasting like 500, 600 million, something like that, which I found very helpful. Yeah, that's for the forecast is always more important than what the actual beat was. Usually, I see it. I believe that, right? But sometimes I see it work the other way too. So what do you know? Everything's an experiment. But there could be so many other things, Hyperbole Kid. There could be so many other things going on with the stock, like most importantly, the share buybacks, in my opinion. And then the share buybacks, maybe it's a huge beat too, or if Ryan Cohen ups his stake that same day, or there's a huge vendor announcement or something like that. It sounds like there could be like a Madden-related type thing going on there, and so like what I'm getting at, Hyperbole Kid, is that there could be so many other things that are so important to the thesis that the forecast or the guidance could matter less. You know what I mean? Whereas traditionally, a typical stock, I'd say, that's usually what could matter. It would still matter. I'm not saying it doesn't matter. I'm just saying all this other stuff could trump it. It could be more important. You think it's an esports gaming move, leveraging all those physical locations? Yes, I do. Esports and in-store experiences and stuff. And guidance on new strategy as well. Oh, guidance on new strategy. Oh, sorry. Yes. Future guidance from... Yes. Future guidance, strategic guidance. Absolutely. But we need something. It's been fairly quiet on that front. You know what I mean? Like, we got the PowerPoints, and I included it in the video. Like, we know what you're generally trying to do, but give us something firm. It's September. Give us something firm. Like, yeah, what esports thing you're going to do? That's why I heard some rumblings of, like, a Madden type, in-store type thing, or a partnership. Just, yes, something a little bit more firm. And then, but in addition to that, if you get something from Ryan Cohen, I think you just need this guy talking about it. I don't know that he is. I have no idea. What the hell do I know? But if he starts talking about the upside possibility, I legit think that I hate to say this, but it could be as important as management's future guidance. You know what I mean? To have like someone talking about it, that it seems as though the media is really interested in his opinion and stuff like that. I don't know. It would certainly help. But it's still important. That's the thing. I think this... It's almost, you know what they could, I'll make a bold claim here, Hyperbole Kid, that they could come out and just say the same stuff, this like what they said in the PowerPoint, that 4 pillars and everything like that, and they could just talk about it, and it still might be perceived positively. Legit, I think that. Because of the rose-colored glasses, like I'm talking about. People just perceive it differently, especially with the catalyst. It's crazy. Let's see what happens. Let's see if it's a meaningfully different strategic guidance too. I'll be curious. But I'm saying it might not even not be, and people could react positively to it. Because I've seen this. I've seen it where nothing has changed. Even the earnings, it was kind of like just neutral. Let's call it neutral is a good word. And but the stock market reacts positively because it wasn't super negative, and because they start viewing things differently. You know. So yeah. Hyperbole Kid, lots of comments and questions today. I appreciate it. Cheers, mate. Cohen probably in a quiet mode now until earnings. Why do you say that? I don't know that that's. I don't know. Oh, about talking about GameStop. Well, he might be in a quiet mode because he might still be building his position. That would be my base case. That you can't do any rounds until you're done building your position. You don't want to jack up the price, right? So that's Cohen will talk on the 9th is my guess. It might take a little bit longer for him to talk about it. He needs maybe. I don't know how much he's been in touch with GameStop management and the board and the directors and stuff. You think he's been keeping in touch? We know the Chewy guys on the board. You think they've been talking, right? You would think that they might have some insight as to what's going on here. Like don't you think it's unlikely they were all totally blindsided by it? I don't know. But if that were the case, maybe he wants to be like an advisor to the company, in which case he probably wouldn't do any talking until that all takes place. You know what I mean? Until he builds his position. Either it becomes an advisor for the company or is added to the board. Maybe he wants to get added to the board. You know what I mean? And so I doubt he would be doing any rounds until it reaches that point. You know what I mean? So there's no urgency on that. I just mean that would be something to look out for if you're a GameStop. If you're long GameStop and this dude starts going around, you saw his website there where was it? Look, if he starts doing this. Which I don't expect him to, but like this, and he was doing it for Chewy, right? Because Chewy had just went public, and this was all in June of 2019. But if he like gets involved with GameStop, and especially like if he's got money on the line, right? This could, if in theory, if he got involved and they did successfully turn the business around, I'm not saying it's gonna happen, but if they did, he could get a 10-bagger on his money, so he's incentivized to do this. But I don't expect it anytime soon. I'm just saying it's something to look out for, because if he did, that'd be sick, huh? For the longs, not for the shorts. Shit. So I think that was it. Yeah, I was talking about the optics, the top. Oh yeah, I thought, where was that thing that I was? It'd be nice if I could find that damn thing that I was talking about, where they was talking about GameStop was being a relatively better performer. I don't know where it was. Bummer. It doesn't matter. And then one final thing, huh? We were laughing about after hours. Do you see how ridiculous after hours action is now? I'm glad we were watching it that day too, because it doesn't mean anything. It doesn't mean anything. And then you had, and not just for GME, but also for the market. I believe the market was up. Last night. Like it was down at first, but then it was up, and it looked super green. I believe futures were. It was like up over 1%, and then it crashed today. You cannot pay too much. You just do it for fun. Like that after hours type stuff. Oh, you know what? I came across a pretty cool site that this is what I would check if you do want to check out after hour action. You go to this after hours. Someone posted this today on. Sorry, I forget. I think they posted this on Seeking Alpha or something. But what you'd want to check. Oh, this is kind of small. Let me zoom in a little bit. You'd want to check out WAP, not WAP, not WAP, not WAP. I'm not talking WAP. I'm talking WAP. The volume weighted average price after hours. And that's so you don't get thrown off by those small odd lot purchases. You might see it down like 20% because one share traded hands or something. But I'll probably check here from now. This is much more meaningful, if anything. And so the after hours, I guess today is 763 with 30,000 shares traded hand, which is nothing. You know what I mean? So I'm glad we saw that, because I was saying that, how this is noise. You can still have fun with that. But and the same thing for the market, just in general. It's just a tidbit. I thought that was funny. And then even small moves. Then it jumped to like 845, whatever it is, and then it came back down. So this is a little bit less bullish, but you have tremendous volatility on a downside when things are not just a stock, but when the broad market's heading south. But you also have tremendous volatility on the upside, and it's like people are just trying, like they're trying to adjust for the new news that they're getting. Like, what's happening here? Is it going up? Is it going down? And it's natural. It's natural. And so I worry that it shakes some people out of a position where that's just how it works. It's people trying to correct for the new information and stuff like that. It's inherently volatile, but it's not necessarily a bad thing. It fell from like 840 yesterday to 720 if you're taking peak to valley. It fell like that much, but who cares? It doesn't matter. It's noise. So expect volatility the next week too. And of course, we're all hoping it's upward volatility, right? But the volatility itself, as most of you probably know, that increases the value of the options, right? That goes. You check out that article; he goes into detail about that. But the level of volatility is important to option pricing, so that matters, and that's why some of those options that are way out of the money are already have value. People are expecting, oh, this could double, this could triple, and so forth. That was it. Okay. All All right, thanks for that. Was good GME commentary. All right, there's not much else. This is a good thing. That's what I mean. You take a breath. You know, how many 3-hour streams can you do on GME? You're running out of things to talk about. Well, hey, next time we live stream though, we'll have plenty of shit to talk about. You know, I mean, legit, the next stream could be the full things GameStop. Maybe I should warn people about that. I figure most people in here right now, we probably all talk about GameStop, but because we'll have the earnings call, and then we'll be reading, and I'll do my best to quickly skim it as fast as I can on Wednesday. But all right, let me close out some of this stuff. And what we can check out too is I didn't dig into like all that the market was doing today. Keep this up. Yeah, this is interesting, huh? I don't know. I don't know if it was interesting. Is there anything to discern here? I don't know. That was just a great opportunity for it to sell off. Because I've been in stocks before. I'm like, oh, it's making the move. And then like the next day, I'm like, oh, damn. I'm like, oh, I should have sold. I didn't know. So this time I was like, because it's a big position, I'm like, what's it doing? What's it doing? What's it doing? Boom, 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 boom. Holding up. So I thought that was telling. And then if you're doing intraday stuff, is there a little bit? I think they look at support and resistance, that intraday stuff. But now we're getting into the weeds, right? We can't do that. Come on. Okay, so this is a pretty strong pullback. Look how overbought it was in the daily, right? And how about the weekly? What matters more for these macro things for my style is the weekly stuff. Like, so this is a little bit bearish. Super overbought. Overbought in January of this year, and then less overbought. And then it never got overbought. This is bearish. But it also has a touch of support here. Oh, it went through it. Oh, it went through and then it bounced back up. Yikes. This isn't much support. If I had to guess, like, this is a guess. I lean more toward this is a bit more bearish. What the other ones do? It was down almost 1% today. Okay, so it bounced back. Yeah, it was down quite a bit more. When I tuned in, it was over. And then my tweet yesterday, it was down like 1% and something. NASDAQ was down like 5% or something, right? Yeah, this looks kind of negative. 3-day weekend too. Interesting. Oh, and about FYI, as many of you probably know, GameStop held up well in March and April. It was I said how I sold a lot of the position to deploy it elsewhere, but I kept it a big position because it was holding up so well. Relatively, from late February to like April, it kind of got hit first, but then it held up really well, where it wasn't even getting whacked until that 1 week sell-off following earnings. It got crushed. But other than that, it was like it held up well. But and now here it is holding up again. These are kind of big moves. These are not nothing moves, and so NASDAQ was down 1%. Yeah, so NASDAQ was the one that was long in the tooth, right? So you'd be a little bit, wow, it bounced back strong. What the hell? How big is that move up? From sub 11 to 11.3. All right, it's not nothing. Oh, this is kind of bullish though, huh? Who knows? I don't know. This is a really strong trend though. So you got to be careful. It's not like this isn't an obvious short or anything like that. Obvious shorts take time to unfold, but yeah, I don't know. It's a bullish trend, so it could just be like a pullback and then re-add. That goes for all these indexes, right? Dow Jones right up against resistance. This broke through though. You'd expect a grind. I'd expect a grind, but I don't know. We're doing this for fun, right? I'm no expert on this type of stuff, but something I want to increasingly dial into. Just that you want the backdrop of what you're investing in, especially if you got a big position, a couple of big positions, just to make sure. Be prepared to take some risk off and stuff. Okay. Actually, boy, this isn't. I was expecting. So yesterday I checked. I should have took a screenshot of it. Lots of red, right? Someday we'll come in and it will be a live stream day, and it will be all red. It's all red all over the place, and it's like, oh, what the heck? What's a bleed into that? What happened today? But then it kind of bounced back a bit today. I mean, things were still down 1.3%, but that's not that much. Oh, Australia was down 3.1%. How's Australia looking? About the same. All those non-America. International ETFs. They were had a pretty similar track. Europe, similar charts. Europe and Australian stuff. They didn't quite get back to the level that the S&P 500 did, but okay. And then lumber's still at 9, really? Oh, look at this, huh? Is my price not updated? What's up with that? Whatever. Boom, boom, boom. Wow. Yikes. These are probably, I bet, I think some of the home builders are getting hit, and this makes sense, right? I mean, these, whatever, if the market's getting taken a hit, usually whatever's leading, that's going to take a hit too. That's going to come back, especially if it's like super speculative. Oh, what did Tesla do? I was like the super speculative ones. That's what I like. This risk column. Let's scroll over. These risk columns, like these are the ones I expect to like take it on the chin. Wow, tech held up pretty well today. Oh yeah, so not everything got crushed today. I was actually surprised. The Roaring Kitty portfolio, I was like, some of these are holding up well, and I think maybe there were some commodities holding up well. But look, okay, so lumber, that price, I need to look into that. Okay, yeah, home builders were down. What? This doesn't look updated, right? No, that can't be right. Oh, is it right? Did it end at 418? Oh, it was up today? Wow. Oh, I saw it was down after hours. I think they didn't get into the S&P 500, huh? That's not good if you're a Tesla long. Tesla tanking after hours right now because they were not. Oh, I think I beat you to it. I think it's hyperbole kids who said the same thing I said. I had seen that. That's not good news. That's not for Tesla long. Not that. How many Tesla longs do we have? Although I've been saying I've been bullish on it, right? But I'd say, but now you got post split. Now you got them not getting in. That's a little bit bearish. And the trend is what looks so bullish. But bear in mind, it hasn't been in the S&P 500 this whole time. It hasn't been in the S&P this whole time. Now, some people were anticipating going to get added, everyone have to buy them, but is now the time to start shorting? Now, like, this is still kind of early. Etsy got in. I did see that. Etsy got in. Hyperbole Kid said, good company. Good business model these days, too. But, yeah, I don't know. It could still keep running just because it's not in. It's not game over. But that said, it's an interesting enough fundamental event that it could be. I'm not gonna make a trade, but it could be now. Could be. Usually, I want to see more. I need to see more of a pullback. Usually, you don't want to short until it's way obvious. That's the time to short because otherwise you get burned, especially on a chart like this. But this one's interesting enough where maybe it'll start causing people to be like, I don't know. But it's so bullish that I lean toward that's not the case, but it could be. I don't know. Wow, I'm surprised it was green today, huh? It wasn't green yesterday, though, right? But it bounced back strong, though. Wow, look at that, huh? All right, so some things held up well today. Not a lot, though. What would Bitcoin do? Kind of stabilizes a bit. These are worth checking out because these are the times to check out these macro type charts, right? Because when stuff's happening, usually there's nothing happening. That's what you say. You check it for 10 minutes and you move on. That's it. Get the gist. All right, Bitcoin's coming back a little bit. Let me just back out. Does the trend still look good? It do. This is kind of what I was looking at here. I think I did that during the maybe below 9 is when it starts. Even then, I'd want it for a couple of weeks below 9. This is not high conviction analysis, right? But this was what am I can't do high conviction analysis on Bitcoin. What the hell do I know? You see the type of analysis I do. All I can do is chart this type of a thing, and I just don't want to rule these out from my investment universe, right? I want to be keep my eye on these types of things. So this looks fine. I'm not doing the daily stuff. Weekly's fine. There's nothing going on there. But it's a good time to see what held up well this week. You know what I mean? That's why I think GameStop. Like I'm curious about that too. What held up well? And that's why I was kind of looking through the Roaring Kitty portfolio, seeing like what was holding up well. Need a stimulus package from the government to also help pump retail stocks for GME, CLD. Oh, it could benefit. Yeah, well, that's right. They've been talking about that. Seems like it could happen. You'd think that it would be bullish. Consumer discretionary generally has been killing it. We got that sector here. That's actually a good one. Let's check that out right now. Let's check out home builders because these have kind of been leaders. All right, starting to get. Oh, these are the daily. We should be looking at weekly. I should change that. Oh, I think I have weekly. If I click this one, I think I got the weekly. There we go. Okay, just pull back. And then what's, I don't remember what consumer discretionary is. Consumer goods. Is there something more? Well, you know what? Let's do retail. That's what I'm kind of curious about. I got retail in here somewhere. Start with, here's consumer discretionary. Oh. Just want to check out weekly real quick. All right, yeah, that actually bounced back kind of strong. What do you call that? There's some name for that type of candlestick. I forget what it is. Inside out day, upside down day. I don't know. It's got a name though. It doesn't look that bad though, but it's some. All right, now time to keep an eye on this stuff. Where's retail? Come on, industries is definitely here. Right there. It's right at the top. I'd say I put it up at the top on purpose. Right above. Okay, it got bit up a bit. It got bit up again. Look at it. It looks like it bounced right off of a little bit of support. A touch of support, not much. You know what I mean? It's just one little thing there. All right. Keep an eye on that stuff. But I should have retail over in my risk column. Like this is the top. Oh, what did the VIX do today? Or this week, rather. All right, it's heading back up, huh? Kind of bearish. Can you do some people do technical analysis on this stuff. You know what I mean? They do this. I doubt it. I can't do that. I have my limits. I got my limits. I can't do that. But I think some people do. Anything else worth looking into? Put call ratio. Do people get super bearish on this front? I looked up the definition. I want to see the actual put call ratio. A couple things I might check out. I mentioned I try to do a little bit more of this. Oh, look at this. This is good. When it's bumping up like that, it means you're getting way more puts. You look at these things for extremes. See March 20. I made a note for myself, actually. I think I showed this on the stream before. Check this note. I made this note for myself. Buy heavy when the 10-day simple moving average breaks 120. You know what I mean? Like, because I forget, I'm not super. I don't. These aren't. You see the analysis I do, right? This isn't heavy part of my analysis, but I'm like, I'll keep an eye on this stuff when things are going crazy, just as a reminder for myself. Hey, heads up, this is a good time to buy. I mean, you can see it in the valuations anyway. This why this stuff is kind of like, you already see it when you track so many companies. You see what their prices are doing, and you already have a good sense of what the value is of the company. So you know they're super cheap. And then you look at these things, it's just like, yeah, well, it's confirming kind of what you already know. But still, it takes 2 seconds. Pop it up. Who cares? But you're mainly looking for extremes for these types of things. Other people, you rely on them heavily. That's a different type of strategy. It could be very successful for them. I don't know. But for my strategy, nah. But that's kind of interesting. What did I do? Close out of it? Right there. This is good, though. So this is good because it gets some bearishness here. You know what I mean? I'm starting to get amped up for the highest since June 26th. And that was kind of a downtime for the Roaring Kitty portfolio. I remember that. They were kind of pulling back a bit. This is a touch bullish, though. You know what I mean? See how difficult this is? What do you got? You go crazy. I don't know how people use this stuff so heavily. I look at the charts. I'm like, yeah, this is a little bit bearish. And I'm like, here. I'm like, all right. Now couldn't people get a little bit more? But you get a little bit more bullish because people are positioning more bearish. I don't know. You go all over the place. What am I even doing looking at this in the first place? Don't ask me. What are treasuries doing? Look at this chart. Wow. Jeez. These are the very short-term treasuries. And okay. Oh, you know what one? U.S. dollar. What's the U.S. dollar doing? I bet is it down today? Look at that tech, Freeport. I bet it's down today. There's my guess. No, it's up. Oh, is it up today? Oh, does that mean it's up? What did it open? 92. It's a. Oh, it's kind of up. So, yeah, let's back out. Let's look at this. This looks bad. Not bad. That's the wrong connotation. Wrong connotation. This looks bearish for the U.S. dollar. And as we've talked about, I mean, this is part of the reason why gold's getting up. But this looks really, I mean, I know people are talking about inflation, but this looks real bearish. We definitely, like, when I start the streaming, like right around here, we're like, all right, let's keep an eye on this. Let's see how it, but this is pulling back. What is it, 92? I've always thought, yeah, right around, like sub 95. Sub 95 that's something. Sub 95 is something. Most times it's just noise, not much happening. And then I'm like, I think maybe I noticed that a couple days ago. But, and look at this RSI. Oh, and we're on the weekly. Do I have enough inflation protection? I'm not banging on inflation. I'm just saying, people do this too. Like you do, can you do technical analysis on the RSI? That people do. I don't know. At least it's just it's showing you a trend. You know what I mean? And okay, this is good. I mean, this is if you have a similar strategy to what's done in the Roaring Kitty portfolio, you might have here just so you can see. Here's this exposure. You can see what kind of exposure I have here. And this is from bottom up. Look at this consumer discretionary. Oh, don't look at my cash position, please. Don't look at my cash position, please. I did just getting it raised up, and then do the damn GameStop ad. Probably like an idiot. No, we'll see. And anyway, I get materials and energy exposure, and of course, energy was looking. Oh, we're checking on energy real quick. How'd that hold up this week? And I saw natural gas. They held up okay today. I was kind of intrigued by that. But so if the U.S. dollar keeps falling, that's kind of good for the Roaring Kitty portfolio, because that'll probably be these industries these more cyclical industries that kind of benefit when it's a weaker dollar. And in hard assets, of course, in emerging markets and stuff, that tends to be the types of companies that you'll see in the Roaring Kitty portfolio. So those tend to all work together in tandem and go up as the U.S. dollar is falling. So I keep an eye. So I'm glad we pulled this up. This is a good backdrop for me to remember. Wow, this looks kind of bearish. How about the monthly? So far, this might be the most noteworthy thing I've pulled up. Where's it going? I mean, maybe there's a little bit of support here, but it needs to hold this. It needs to get back up there. Give it a little bit more time. We'll give it like 2, 3. This is monthly. Give it a couple more weeks or something. We'll keep an eye on this. But, maybe uncertainty around the election and stuff like that. And I know Jerome Powell was talking a little bit about a little bit more of an inflation tone. Like I said, that's what I read it somewhere. You know what I mean? I don't know what that means. Something's going to come of it. All right. Wow, look at this. What's this, 2-year? That looks bearish. Really bearish. All right. What's oil doing? Oil. Yeah, I thought oil was coming back a little bit. What's going on here? It's finally doing something. It's starting to pull back a little bit. Look at this. Starting to look a little bit bearish. That's the daily, and on the weekly. That's the daily too. So oil too, huh? Look at this. It's below 40. It's below 40 for the first time in a while. I mean, I got a bit of energy exposure, as you saw, so we got to start doing something here? I don't think so. Jeez. Was this a weekly? Is this? Take it off. I don't know. I was trying to get rid of those things, but on the weekly, it's kind of weird. Okay. Definitely keep an eye on. I think I made that note. Did I make that note before? You know what? We should check this real quick. Oh, what's gold doing? 1937. Nothing. Holding up for now. It's probably waiting for the U.S. dollar's next move too. Like they're kind of working together. Looks okay though. Silver and this silver looks the same. Silver's probably a little bit more. Copper's still above 3. That's why. See those held up today, huh? Oh, it was up today. Hey, we guessed that. See, you can guess what happened. You see all these names up right here. Freeport, Tech, Sibanye. You could expect something was going to be up, but copper was up today, huh? What was that news about? Freeport, Indonesia foresees copper production doubling. Anything else? Nothing else today? It's not that bullish. There's probably news somewhere. Just a quick 10-second check. Well, look at this. So internet was down. All these internet stocks. Are people starting to forecast that this is it? I don't know. Is it going to turn around? We getting a rotation? I don't know. How's the euro? I'm kind of curious about the U.S. dollar. What's it doing? The euro is increasing a little bit. It's looking strong, right? That's going to happen, right? If the U.S. dollar is weakening, not all currencies are necessarily rising against it. You know what I mean? There could be some currencies out there that are weaker than the U.S. dollar that are falling even more. But pounds rising. How about? Oh, this isn't a good one. Okay. The dollar to the yen. Okay. Oh, and how about EM local currency? That's holding up okay. Dividended. Just adjusted. Okay. Just wanted to check a couple things real quick. Okay. With more stuff unfolds, like with the market still kind of going all over the place, I'll probably do more of this stuff. I just wanted to take a quick pulse. It's only been a couple days. I don't care if it picks up a bit. Then we'll start looking at that. It's more important right now. Like, we got a quick take as to what happened. Now let's move over to the stocks. Was there anything else I just want to check? We saw copper. What about something like zinc? It's gonna be these usually. It's gonna look similar to copper. Those base metals. Oh, it's kind of weird. What the one? Give me the 1 month. 1 month's up. Interesting. 1 week? Kind of flat. Okay. Okay. All right. Let's get to the stocks. Anything down today? Yeah, the home builders, Tesla was up, Bitcoin. I kind of relatively quiet. Oh, what's Toll doing? Value Shop. They're looking about the same. Okay. Bouncing back, stabilizing. Oh, and the momentum. Some of these things I forgot they're in this. I forgot they were there, and I'm like, oh yeah, that's kind of cool. Let me open this up. I hope that's okay. I just like finding new things out about the spreadsheet. Oh, it bounced back. This is momentum. It got crushed, right? But hold it now, bouncing back a bit. You could probably just track that one. That would be a good one to track. That's why I put it in this column. I'm glad I did that. Oh, is tail risk heating up? This is a Cambria one. They got they use an option strategy. Kind of coming up a little bit, but nothing crazy, nothing haywire, right? Although yesterday was kind of a big down day. All right, let's see what's going on. Let's see what's happening. See what I mean? There's not that much red or green today, huh? What did the market end up doing? Oh, did I just? Oh, it was down 1%. Oh, the Nasdaq was down 1%. All right, it was but down 0.8%. It was down, but the interesting that did you see any red? I didn't see any red. There's no red. Oh, maybe there should be -5. Oh, it's probably -4 point something, and it didn't trigger. Yeah, I bet that's it. Isn't that interesting? Boom! First thing that catches my attention. These should be more red, right? I mean, I'm dealing in more speculative stocks, smaller cap companies. I mean, the Russell was down too. Small cap, it was down. No, but not as much. So this is what people are talking about, right? Just one day. But this rotation into small caps, could those start outperforming? Large caps been crushing it. That would be sick. We talked about in the last stream that tailwind for a company like a game. I mean, it's getting a bit late in the game for it to hugely benefit GameStop. But if you did, that's what I mean. Just to use GameStop as an example, but this applies to many value stocks. But you could have an unexpected tailwind that has nothing to do with the company's fundamentals. All of a sudden, what happens is people just want value stocks or companies with lots of cash on the balance sheets, or the traditional type of a value stock trades at a low price to book, whatever it is. And then all of a sudden, people want it. And you could have no news on a company in over a couple of months, and then all of a sudden it gets bid up like crazy because all of a sudden people want it. Look at 2013. That's what happened in 2013. That's the last time you really got a big taste of it in a big way. 2016 was pretty similar because of the big rebound in energy and materials and stuff. I was heavy in those, and really I can just think back to any time my portfolio was doing well. I'm like, all right, that was the time. But 2013 in kind of a big broad way. 2016 to another degree, and then that's kind of it. Then it's only been in pockets, like some retail did okay. Was it like 2017 into 2018? I think mid 2018 but it's only been in pockets, nothing big. And then the market sold off in late 2018 and things bounced back strong, but it was a little bit of a different feel. But if it suddenly happened, and I know if you check out GMO, Jeremy Grantham, you should read Jeremy Grantham and GMO, their stuff. They got good stuff. It's a great starting point too if you're curious about people have been shitting on them lately, they're value investors and they've been having relatively weaker performance, but they know their shit. And but they've been saying how this like small caps and value stocks, and in particular emerging market value, have been underpriced and performed so poorly relative to the larger cap companies in the U.S. for so long that it's like an all-time discount, relatively speaking. And that's not to say there's going to be a sudden, you're not going to flip a switch, it's going to flip. But when it does, it could be one. I talk about those multi-year trends and stuff. You could get like a multi-year crushing it in like value stocks. So I mentioned 2013. Before 2013, it really happened in like 2003 or late 2003, 2004, 2005, and into 2006. Of course, the housing bubble and stuff. There's a lot of other stuff going on too. But this happens. You get years of bull runs in these types of stocks, and it's really hard to forecast. But this is my thing: is that some people out there think it's necessary for outperforming, for value to outperform. That's why people always talk about like value's been underperforming. Actually, I talked to someone about this. I don't know if you all think that value's been underperforming for a decade or something, but everyone uses those oversimplified ETFs. Like whatever it is, it just trades on like price to book versus whatever, and they say, oh, they've been losing 10 years. And I'm like, no, they haven't. Like, I'm a value investor, and I've done well over that time period. I mean, it's definitely worked. It's definitely worked very well. But then I was talking to someone recently, and they're like, well, you're not a value investor as it's traditionally defined. You're a value-oriented stock picker. And then I thought, all right, maybe there's something to that. You know what I mean? Like, because I'm looking at charts and stuff, and I'm more selective, I guess. I don't know what your takes are, like, but I staunchly believe value has not been underperforming. And so it's such a pervasive viewpoint. I know I'm in the minority, but I guess it's just maybe it just depends on your style. But I feel like my style is value investing. So and what happens is the issue is the definition of value. I feel like that's cliche, right? But you can't just have low price to book or energy or financials. Like it's so much more. There's so much more nuance to it that if you say value is just low price to book or whatever, you're always going to have energy and financials be it's going to dictate how the style does. And that's ridiculous. Like there's plenty of value abounds. It's all over the place. You can even see it. This is my thing. It's like I mean I would argue you can even see some value in the charts, right? And I know that's anathema in the value investing world, but forget the charts. You can find value all over the place, in even some tech companies and stuff like that. And it's just a little bit weird. So anyway, but even still, there'd still be if there were a tailwind of all of a sudden people are interested in value stocks, even the traditional definition of it, that would even be an additional boon to like the Roaring Kitty portfolio as an example. But now it's September. I don't know if enough could happen to help GameStop in a big way, but it could. It can happen quick. It can happen like this. In fact, can I pull up? Do I have one of the? I hate when I scroll so much. I got these links, but I guess I do need to scroll sometimes. But like I got this style column here. Where's a good value? We could just do the Russell 2000. Keep it simple. I always like to keep things simple. Like this isn't straight value, but it's smaller cap companies. Oh, I need to go like 20 here. So look at this. Here you go. Russell 2000, just as a proxy for this. It wasn't as late as I thought. April. It started kicking things off. From April 2003 to June to like April 2007 for like 4 years. Russell 2000 smaller companies were crushing it, and then boom, and then they got beat. And then here you go, 2013. And then you could have seen this on the charts. This is why I've done this a little bit of case studies for a technical analysis. I mean, fundamental case studies. You got to do that too, but I get more of that from just experience because that's how I actually buy the stocks. But then I'll do some like case studies on the charts to just see if this is me trying to learn charts. And I'm like, you could have seen this in the chart in January 2013. You had a breakout. Right above the Russell down. Boom. That's super bullish. That's bullish. This is like a little bit of resistance there too. A couple of times, and time passed too. A couple years passed, and then you break above it, bullish. And it just so happened you got a couple year run there. And then if you dug down into individual companies, you would have seen. Look at them up there. 2013 performance. They crush it, and it happened. Even this is the Russell 2000. Oh, well, we could look at GameStop, but that's a little bit weird because it had a catalyst. But I don't know. You can come up with one. And now this, I mean, it's a little bit late in the game for it to have a big impact right now for a company like GameStop, but other companies. Where the hell was I? I don't even remember. All right, let me X out of some stuff though. Boom, 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 boom. Just have to get tab overload. I was looking at the market. Yeah, so that's what people are talking about. Is this the start of rotation into it, right? I have no idea. We'll see. I do have a comparative type thing. Watch this. Oh, let's pull that up. Sorry, one more chart from over here. What time is it? 8:16? Ah, that's okay. I got like some relative charts. Where is it? I don't even know where I put that stuff. I think here. All right, watch this. Yes, I did it. Here you go. Watch this. So the S&P 500 versus the Wilshire 5000. S&P has been beating it. If you chart like this in stock charts and you use these colon, it's like a relative chart. All right, let's look at a couple of these. S&P versus the Dow. We did this a couple weeks ago, I think. NASDAQ versus the New York Stock Exchange. It's getting a little bit volatile here. We're getting a little bit overbought here in 2020, kind of coming down. That's first. Okay, so that's versus. What about versus the S&P? We'll get there. QQQ versus the S&P. All right, getting a bit heavy. And look at. Is this weekly? Sick. Getting a little bit bearish here, as in people might invest in the S&P. And what about Japan S&P? Okay, kind of bouncing around there. But what I want to check is I definitely have. This is versus Germany, Hong Kong, India. I don't care so much about these at this time. I don't have one? Damn, okay. Let me just chart it. Let me just use this for a start. And let me do, let's do this. SPY to IWM. Excuse me, IWM to SPY. Should work right? Oh, sick. Okay. So this is Russell 2000 versus the S&P 500 ETF. Oh, look at this. Hey, you get a little bit of movement here, huh? See this? See these green? Look at it. Some green candlesticks for a change. This is, and so the early days here. Is this weekly? This is daily, so it's just a couple of days, right? So something to keep an eye on. This is versus the S&P 500, but you might do it versus QQQ. How many Qs is there? 3, right? This is, so the people will keep an eye on this. Yeah, I can't chart this. Come on. See this? So look at it. Almost look like. Look at this. Oh, I don't know. This is super low conviction, but can you spare me 10 seconds to do this? This is the Russell 2000 versus QQQ. And did it just reach a peak? Oh. Let me know if anyone else talks about this, because now I'm intrigued. Oh, let's back out. Let's back out. Give us a little bit more time. What was this, 1 year? Can we do that would be something, huh? We look back on this in like 5 years and be like, that was it. Oh, look at this. See that? Oh, this is the daily though. Give me weekly. Look at this. It kind of looks like it's bottoming a bit. Again, like I said, not high conviction, but something I'm trying to incorporate this. It's an experiment. We're experimenting. We're just testing stuff out. Looks kind of interesting, huh? Look at that. It's just hovering around for since boy, it's August. Wow. 2020 is like, what a weird year, huh? Need a drink thinking about 2020, huh? It's crazy. This many months have passed since March. You know what I mean? That's just what caught my eye. Look at that, though. Looks like things are looks like it might be kind of turning around there. Something to keep an eye on. If people start talking about that relative performance, I'm going to check out for that. Okay. All right. So, yeah, because we just checked out what the market was doing today. All right. Now let's check this. Well, boy, no red today. I know there was some red yesterday. But that's what I mean. We missed it. That's why maybe I should do this more frequently. Oh, FTK, son of a... Wish Jordan to call me out on that. Oh, he bought. So I don't know if you all saw this, but boom. Watch this. He bought again. 400K. Suck. He keeps on adding. Same guy. Nuremberg. He's a big investor in the company, and he's a director on the board and stuff. He knows he's dialed in. I think that was part of the reason for it got bid up, by the way. I think I'm going to add. We should dig in together. It's already a big position, though. It's number 6. I saw Trinseo was moving up today, too. It was up 4%. That's sick. Sick. Look at this chart. Is it time to add to that? I keep on thinking about adding on pullbacks and stuff. So these market pullbacks. So this is, and that chart looks good. These market pullbacks is, and what I want to do too is that whenever you want to add or trim, and we're making notes here, do this, do that, and we have that add and trim column too, this buy list here. On those big down days, that's the day to be doing it. Just make a note to yourself, add or trim, and just wait. You just got to wait a couple days or a couple weeks. The market will have a down day and give you an opportunity to kind of everything sells off together. And then you do your little add in right there. These past couple days would have been a good time to add. You just go through your list and be like, yeah, that's pulling back. Let's add a little bit. Or if you got some risk on, then maybe you trim a little bit on some of those positions. Be like, yeah, this is looking a little bit bearish. But those are the days to do stuff. Maybe you don't do stuff most days. You know what I mean? I don't do shit most days. But those are the days you'd be a little bit more active because the market's like, here you go. Here's an opportunity if you want to do anything with it. You're like, all right, yeah, I'll add a little bit. So really, that's what we'd be doing. Maybe down the line we'll do that. Could have been trimming. Look at this. We have home builders in the sell, and they were down today. I've been trimming. So when you see sell, this is like sells, and I could be trimming or whatever, or rebalancing or something like that. In this case, it was trimming because they've been huge winners. I think I did. Did I trim a little bit? I forget. I think I did trim a little bit. Again. Camping World still holding up. Wow. So it would have been a good opportunity for this to sell off, and it didn't. Nice. Sick. And then you can also notice on days like today what held up. That's what I mean. People on the stream talk about GME holding up, but other stuff in the portfolio held up too, and that's what we're going to see right now. Fortunately, I'm getting more dialed into like Trinseo. This looks good. This was the biggest position in the portfolio for a while in March. And it turned out to be a good decision. I made bad decisions too, but that was a good decision because I'm like, this looks cheap, and I think it's going to hold up well, and it did hold up really well, and it didn't go up. It didn't go up huge, right? And I've been trimming it and putting it in elsewhere, but it got the job done. In a time like March and April, where everything's going crazy, I always talk about you're putting different plays on for different reasons, but especially then, like you say, I'm going to park this cash here. Just remember when the market was falling off? Oh, it was falling down like 10% a day. We saw that take 10%. I don't want to say we may never see that again, but that's so rare. And like you're actually putting on a trade, be like, just in case we fall another 10% tomorrow, right? That's nuts. But I was doing that, and I'm like, we might fall another 10% today, and if we do, I don't want to get my ass handed to me. Let me put it in something that's a little bit safer and it won't fall off as much. But is also undervalued, right? I mean, a lot of people do this, right? This is you're just trying to position accordingly. But I found I was doing it significantly in March. And then if it gets bid up, then these things will bounce too. But if it gets if it sells off even more, then you can take it. And I did this, and I take it from like a TSE or a GME, which again they were holding up relatively well, and I'd move it over to the other stocks. And so I did that a number of times. And so I've been pleased with this TSE position. You've been seeing it up here this whole damn stream, but now look at it's getting up. This might be one to add on a pullback now, right? What's the latest? Wow, it's holding up real well. What's the other one? OLM. Remember we added this? Wow, it's over 12. Chemicals holding up okay. Natural gas is too. Man, we were just looking at OLN. You can do anything you want with these lines. You know what I mean? Look at this. Where do I want to put it? I'll put it. Where do you want me to put it? I'll put it anywhere you want. I don't care. Put it here. Put it here. But you can just see it's kind of a downward trend, and it's kind of bucking it just a tad here, just 1 week. Damn. We did add, but I was kind of waiting. I was kind of hoping I was looking kind of messy there. Remember, we'll give it more time. But TSE's holding up real well, and I like that one. We haven't looked at it much on the stream here, but did they report? He's had some good articles here. Prati Management, you can check it out. And some good comments and stuff, too. I agree with a good amount of his analysis. But importantly, too, they have some some funds who... Do a Google search of this. Trinseo, and then February, there were some funds who were like... They took a 20% position. It looked like they were going to try to get involved and shake things up. And they were taking it above this price, like in the 30s, I think. Interesting. Okay. It didn't even pull back. That's, keep an eye. Things hold up well. I like that. And FTK. Really got to research FTK. Dig back. See this? Dig back into FTK. See that? FTK shit. I forgot I wrote that. I think that was because Jordan had said he's like it was up. And I'm like, damn, I keep messing it. I think that was up that day because he bought. Yeah, that day. It's got a strong balance sheet. Might be time to add. I might just add. Oh, add? It's just so big. I think I might add a little bit. I'm going to make that claim right now. I'm not huge, though, because of that risk I talked about. I don't know that they can actually incorporate this new business and everything and actually change things around. But he bought again. So that's an update, right? He just bought. When did he buy? September 1st. Oh, was that Monday? Oh, it was Tuesday. So we did know on Wednesday. But he didn't buy that back. He bought $400K. It's something. Maybe we'll add on a pullback. Let's keep checking things out. FTK. Yeah, kind of cool. OLN 6%. Oh, it's moving up in the portfolio. Oh, I did add to it. Oh, good. Sick. It's number 24. Sick. Fossil holding up okay. Oh, I think I trimmed a little bit of BXC. I noticed it was getting a little bit weak, and I've been kind of just waiting to trim it. It wasn't like a top 10 position, but I like this. I'm like, okay, time to trim. So I definitely trimmed that. So you notice that bump down. Difficult to value. Like it's a speculative position. It was a huge winner. I mean, it's like a 4-bagger or something. It was sick, and I still think it could go up more. I just didn't know if I still wanted that much risk at the top. It's still a big position, right? But we'll see. Because given the uncertainty in the market and stuff like that, let me just trim a little bit of risk. Just looking at price points here. SandRidge holding up well, huh? I like this one. It's holding up better than the other natural gas players, huh? It's up. This one looks good. I think they just sold, they like officially sold that their headquarters or something. Carl Icahn's involved in this one. Pretty sure they did. Damn, I think, so maybe I add to this one. Yeah, here we go. What'd they say? Today announced the closing of the sale. Man, I thought it was already closed. Didn't close yet? I feel like they announced it was done or something. It was real close. But now they have the cash maybe. That proceeds of $35 million. As of June 30th, the company had approximately $14 million in cash and $59 million in debt outstanding. The $35 million net proceeds received as part of the closing of the sale significantly reduces the company's net debt position. The company believes that the closing of the sale and resulting receipt of $35 million should alleviate any substantial doubt about its continued bullish. Sick. They maybe had some concerns about it continuing as a going concern. Oh shit. Okay. I think I'm gonna add to this. Oh, it's already so big. It's got a lot of upside though. This is why it's Carl's involved. The balance sheet's looking strong. Look at the net debt position. You know what I mean? Graphic calculator's out. I mean, that was as of quarter end, right? So not 59 plus 35. So they got, I should have been able to do that in my head, right? So they got $10 million in debt? That ain't shit. Yo, let's pull up the fundamentals again. What else should I pull up? What was that? Oh, let's look at TSC. We'll look at TSC. Oh, I thought I wanted, there was another one. Yeah, so it's holding up really well, huh? And then, like, this is, I mean, it's an energy play. Right? Look at this. Wait, look at this chart here. What's this chart doing? This chart looks, oh, it's right there. Probably might need a little bit more time, but now it's got energy. It's got energy to go up against right now. But the business, this is the thing. I like, people were like, oh, I need more energy exposure. They'll just buy some energy companies, right? But don't you want? This is like with New Gold. You see New Gold up there. Like they're running into some operational issues, as in SandRidge was running into some issues too. But now they're trying to rectify the situation at the business level. And then, if energy turns in favor, then of course they're going to benefit in a big way on that front too. Wow, this looks good on the weekly. It was up this week because of partly that announcement. Where's the? Okay, let's pull out the fundamentals. Where is it? I think we looked at this on the stream recently, right? Taking a while. It had $5 in book value as of June 30th. I mean, you can't be concerned about $10 million in debt, right? Do they have bonds? They might not. It's kind of. They used to be a way bigger company. Yeah, nothing. Well, it's bonds. When are you talking about bonds? They got $10 million in net debt left. Well, I don't even know if it was a bond or whatever. It could be a bank debt, or it wouldn't be listed, of course. That looks. This is kind of a solid. Like FTK is kind of a solid energy play, and this is kind of a like speculative. Don't get me wrong; these aren't like Exxon Mobil's, but I'm like, if you're gonna make a play in an industry like this. A cyclical industry like this, especially, and then oil wasn't looking that great, right? Didn't we just say that? What am I doing? Just go like this. Come on, I got shortcuts. I mean, maybe you drag your feet a little bit just to keep an eye on what's happening here, but it's looking like a little bit. You might just wait a little bit. Could also just be pulling back to right here. It's nothing super alarming, but this looks kind of. Don't look. It doesn't look great. I'll say FTK too. Actually, there's no rush. There's no rush. It's up. It's like FTK is up partly because he was buying, but I'm not so sure there's any rush. Except this chart's starting to look good. Did they report anything recently? Okay, so they reported that. No comments on it. Damn, I wish someone commented on that. See what I mean? Like no one's even following this shit. This is good too. So sometimes pull up Seeking Alpha, Laughing Water Capital. I've read their quarterly letters before, but then they had a write up on FTK. I've read this, and it was from September 2019. And then you can see how the stories unfold. These are, if you can remember that, if you take a note of it somewhere, this is why tracking is so helpful. And then when everything sells off, you can remember what their thesis was, and then you can see that right now it's still cheaper than when they first got involved. I mean, if you trust the fund, not every fund does good research, but I remember thinking, all right, this is okay research, and kind of seems like a good idea. And that was September 2019, and then just look what it's done since then. September 2019, it's like right there. It's like right at the same level, and now a year has passed, and they might be. But the thesis has changed since they wrote it up because now they acquired a new company. He didn't know that they were going to do that. But oil pulling back like that, I think you just wait on stuff. What's today? Today's the 4th, so that's today. Give it a little bit of time. How about the weekly? Give it a couple days. But I liked, FTK and SD. When I'm looking at the top, I mean, in TS, as far as upside goes, it's always about asymmetric upside. TSE I kind of like for a double. Oh, let's pull up those fundamentals right now. I just want to take a peek again. They're decent. Wait till you see their historical earnings. It's no joke. They were earning a ton. They also were paying a dividend. I think they're still paying the dividend, and that was starting to come into question. That was part of the reason it got sold off. Look at all this purple and green. Purple and green, purple and green. Remember that? Purple and green means good. And, okay, I got to go fix that thing again. Damn. Slowly but surely, I'll replace all of them. That's quarterly data. Hold on one sec. Oh, what? It changed again? I've already fixed this one. Oh, bummer. It changed again. Since the last time oh, that was a different. It got changed. Okay, so it was a different company, of course. Life of an individual investor. There we go. I was gonna say, oh wow, that's quite a drop off in revenues. Yeah, chemicals. I mean, they're cyclical, right? What do you expect? But look at like the green safe. You don't see that too often when we're looking at companies. Why is that safe? That's safe because look, I mean, it's got quite a bit of net common overhang. Oh, net common overhang. If anyone's curious, here you go. That's just long-term liabilities plus short-term debt minus excess cash and short-term investments. Just like a very broad leverage variable. But it has solid operating cash flow. Look at all this operating cash flow. So this is what it's going to get at. Look at these historical earnings. 2018, they earned $8 a share. $8. Yeah, this year it's down 3, but this is what I mean. That's the opportunity, right? You buy on the those cyclicals. You buy when they're getting crushed and sell when they're dear. And if you look at that chart in TSE, it was wasn't it trading above like 80? Something crazy. No, that's pre-dividend. Oh, come on. What's going on? How high did it get? It got above 80. It did. So it's trading at what? 10 times earnings or whatever it was? Or But yeah, not much book value support. You know what I mean? I always like, especially for cyclical companies, but solid earnings. So if there's a knock against it, that's it. But strong operating cash flow. Look at that, $10 per share in operating cash flow. In simple free cash flow, just a simple proxy. Operating cash flow less capex. $8, $9, sorry. And then net cash flow right there. That's just operating cash flow less investing cash flow. The total aggregate figure, not just capex, which I find is a little bit more conservative, and that looks super. Boy, when it's in favor, they crush it. You know, they absolutely crush it. That's why I think fair value is at least 50. Probably more than that. But on a conservative valuation, I get like, oh, this is worth 50. I'm like, this is what the funds see. The funds see, oh yeah, we can get, and they were buying in, I think, low 30s, maybe even higher than that. They said so if they're buying in, I thought, all right, so that it must be, even though it's cyclical, it's still fine. It's a higher quality cyclical business. And you see this in this gets reflected in things like net margin too. You see net margin, an average 8%. If we move over, these are 3-year averages, but if we scroll over to one year, let me get net income margin. Look at that, 7%, 8%, 8%. That's solid. And it's a chemical company, but that's solid for a chemical company. But again, but cyclical. So in the down years, they get crushed. So that's why I'm often dealing in those types of stocks. Yeah, so it's still the same play to me. Market cap $1 billion. I like that. It's still the same play to me. There could be a good amount of upside. It could be. But I was kind of looking more like here. Unless you get a huge turnaround in the economically, right? If chemicals really come back in favor. The insiders are buying. I don't think they actually bought more. I think this. You see, it was they were moving it around. Anyone buy this? They probably didn't because they got such a big position. They got 20% of the company. BlackRock. Toll. Oh, Toll. That's right. Toll added. We did just look at this. They added. Well, right. They added in the quarter. That could have been any time. But they still had it at quarter end. I think they view it like May. There's not. Well, yeah. Sorry. Here's the insider buying back in March. It wasn't a crazy amount, but enough at that time. Those 2 days, they got like 400K. They bought at 17. Yeah, I like it. It's held up really well. Look at that chart. It's like you get your pullbacks, the occasional pullbacks. But the weekly, it's breaching, getting across 50. That's good. Got to raise some cash. Okay, and then range really pulled back. Bummer. Should have timed that. But it's in a good place right now. It's a good place right now for adding. And then remember we talked about this, looked a little bit bearish, super overbought, less overbought, even less overbought, and then coming back, and it's like we knew it right there. And I did sell some, and I put it into AR, but I should have waited. I should have just dragged my feet just a couple days at least, because AR did the same thing. Same thing. Bummer. I made the switch right there. I should have just dragged. I had plenty of natural gas exposure, but then you have SD, which held up well. So some of them holding up well. And not terrible places right now. Just it could have been better places. You start picking things apart. You can be happy or be upset with yourself about any little thing. So, but I think but importantly, I talk about the potential multi-year bull market in like these natural gas securities. Now we're watching first the adding and trimming, like I was just talking about. But now we need to ensure that the trend stays intact. That's all. And so this is where the weekly and the monthly becomes more important. Like it didn't quite get overbought here, RRC, just as an example, which was too bad. But it got real close, and now it's coming back. But you don't want it to come all the way back and get more oversold than it was. But you'd want it to come back, and maybe you buy one on that dip below 50 or even at 50, with the expectation that maybe if your thesis is right, then it's going to come back up. And then this is what I was talking about with gold. It worked. The gold worked by the playbook, and now it could be that natural gas is going to do the same. I don't know, but that's how I'm going to treat it. and I'll just watch on these pullbacks. So that was why it's kind of silly to not just give yourself a little bit of time. There'll be plenty of times to add and trim on if that's the play, on a multi-year bull market in a particular industry. It's rare that it goes boom, boom, boom so quickly, except it did kind of happen in 2016. You know what I mean? Things got sold off so hard. And I was a good example, like I was saying precious metals generally, but like take CDE for example. Look at this, CDE. This is a prominent silver miner. This was January. Boom, 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 boom. And then by August, 6 months, almost a 10-bagger. So I guess I'd say that was even more oversold. Those were crazy prices not across silver, precious materials generally, and energy and stuff. But this one was that was a unique performer. But even tech did well too. How tech? No, tech. Yeah, it bounced back kind of strong. Sometimes they go boom, boom, boom. But they're also then it's kind of topped out. But our RC is going boom, boom, boom. Couldn't just be taking a breather. All right. Okay, let's go. Yeah, SandRidge fundamentals still look good. What were their historical earnings? Do they have any earnings? Just take a peek at that. I'm talking about adding. I should at least see that historical book value too. $23 back in the day. I know it's not now, but still. If it comes back in favor. Did it earn $1 in 20? Oh, the same thing. I'm hitting the same error. Arrgh. This is so annoying. I can't even, now that I'm seeing that there's multiple classifications, I can't even go back and fix it all together because it seems like new classification. I mean, not that you care or anything like that, but I was thinking about doing it, just making a quick run and fixing it all off the stream. Yeah, look at that. Book value. Earning. Did it earn $1? Yeah, that's what I mean. I think I saw that. Did it earn $1 in the 12 months ending June 30th, 2019? What? Did it have a gain on something? Legit operating cash flow too, $4. I mean, free cash flow stretch. I mean, it's a loss, right? It doesn't have any. But that's not the point. Plus, if you're interested in the stock, you got to read the Google. And this is when you're like starting to research a company and you just want to learn more. Just Google the company's name and watch this. You're gonna see a whole bunch of Carl Icahn stuff. Well, I just told you. But if you were doing a search, you might say investment thesis. Could I say that? But then think like 40% less than Carl paid, and like stuff like this, and then you start reading the story, what unfolded, and he was getting involved a long time ago, and now he's still involved, but it's like a real small position for him, but he didn't sell out. Now it's like, all right, he's still believing in it. All right, sick. Okay. CVGI is kind of just bumping around. Everything's just kind of just hanging around, not doing much. Stuff's holding up pretty well considering this, what I thought was a pretty sizable sell-off. Right, now like no red today. TA's holding up. Oh, we talked about adding to this on, what did we say, 15, right? It was a nice pop, but yeah, okay, we might get that. If it's a speculative play. Max holding up well, I never did. OLN's moving up. UFI, didn't UFI sell off? Yeah, a little bit, but it's still right there, huh? Not much. Yeah, it sold off that day. I saw that. But it's not doing anything. But I think I said something about adding to that. Look at this TGB. Wow, crushing it, huh? Did I trim? I don't think I trimmed. Remember I said like I just keep on holding it because it could go up to $2. Yeah, we just looked at that on the other stream the other day. I didn't add to it either, but geez, that looks good, huh? Wish I did. Wish I bought more. There you go. Talk about boom, 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 boom. 5x. A couple of months. CDE. COA. All right. Not much happening today. And they're all kind of, yeah, not much on the, nothing to report on the prices. Alcoa right there, and GS, just thinking about adding that. Oh, it's holding up okay. Oh, I could add to that. Safer play, right? Safer play on the compression, natural gas compression equipment. ASPS. All right, all these price points look about the same, so it's just like there's not much. Okay. And what did DBI do? Did that do stuff too? I feel like I'm always looking. Oh, that one. Maybe that's the one that sold off quite a bit. But it's right there. It's holding up. Cool. Some of them what happens is they get bid up right before earnings. That's what I was thinking it might happen with GameStop too. And then but sometimes they miss and they sell off. They got ahead of themselves. GII, Forum, OVV. Okay. Flex Shopper pulling back. All right, let's check daily movers, huh? Like Mason? Oh, look, I gotta remove these. Like, see the market cap 216. That probably means that they don't publicly trade anymore. Or something happened. It means I need to remove them. Remove LM. I could do that during stream, but I don't know how much you could take, you know? Got to pull up the universe file. Let's see if I could pop it up, and it won't take that long. What else was down today? Cypress, Vapotherm. Oh yeah, this was that. This one is in the portfolio. Was in the portfolio. We were just waiting to watch what happens. I think. Oh, I may have just trimmed it because it broke through. It like had to hold that for me to continue carrying. I had to hold around 30. Then I fell again. I'm like, what's going on here? So I think I remember it was a small position. I think I had already trimmed. I had missed that. Bummer. But now I'm like, this looks. But even there were some insiders, there's some funds buying in that I thought kind of could be potentially bullish. But Oxford, Dixie Group, HOV, Home Builder. J. Jill, Garrett, Horizon Global. All right, not much happening. Okay. Oh, wow. Yeah, not that much of a down day today, you know? I mean, I only have a 10%. I'm kind of glad I changed. I used to have only all the stocks that were down 5%. It's just so many stocks. It's like, and for a lot of stocks, especially ones that I might be interested, like a 5% move or 8% move is not that big a deal. It's kind of a big deal, but not that big. So unless you're in the portfolio or the watch list or wherever, you'd only get here if you're over 10%, which I kind of like. Let's check what was up today, right? Oh, this company just fell back. Oh, I talk about here's a case study for you. I nailed this one. I refuse to add this to portfolio because of how bad. It's super leveraged company, super leveraged, and the chart was just looked terrible. And it was just, for years, and I kept on seeing it pop up when I was screening and seeing other people's funds, and I'm just like, this looks terrible. I refuse to add. And here's a case of the charts. They don't say they saved me. The fundamentals looked super. It was just super leveraged, and but some people were talking it up, or funds, I can't remember. And then it went boom, 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 and then it didn't bounce back. And I remember thinking like, oh, did I get this wrong? And then here it goes. They just filed for bankruptcy, and so that was one that worked out according to plan. So I was happy. Oh, not happy. Happy's not the right word, but it substantiated my belief of what I was seeing with the fundamentals and the technicals. I'm not happy a company goes bad. I'm indifferent. It doesn't matter. But always experimenting, right? Seeing what's working, what's not working. And when you take a guess at what's going to work and it's right, they're like, all right, that was okay. Maybe that was good analysis after all. That's what I mean. Duluth. Oh, yeah, Duluth. That was in the portfolio for a bit. It's not even watched right now. That should be on the watch list. That's a mistake. Oh, shit. Why isn't that even on the watch list? Ah, damn. Watch this. I can do this right now. Watch this. Oh, you know how I can do this? Because that's right. I forgot I can do this. This is sick. So, this will take, watch this. So I'll check that off. All right, we're almost done with these. So let me go back down here and check these off. Boom, boom, boom. And I guess that's all. And they'll pop up in the universe, then I can take them out. Wow, not much. Okay, so kind of a quiet day. Boy, I thought it was going to be noisier. So now we know what a good thing to do today is. What is it, 8:51? Sick. All right, let's just check insider buying real quick. Okay. These are companies that filed some insider buying like roughly the past week or so, but within the spreadsheet, so you can see some fundamental analysis, some other stuff, some other data with it. You can do this on Open Insider, which is sick. This is what we do. We pop this up and just see if anyone did anything, right? But let's just do it a little bit different this time. Within here, if anything catches our attention. Here's how much was bought this week. So the bright green, but these are like the dark red. I'm like just gonna skip the dark red. I don't care because these are financials and are these more REITs? Yeah, hotel and resort REITs, property and cash, like those. That's just not my cup of tea. So I usually just skip these. I'm not even paying attention. Kinder Morgan, but I heard the Kinder there. He's always buying, but I actually don't think this one was Kinder Morgan, right? Wasn't this someone else? Yeah. Oh, it was him. Yeah, it was him. 100K. That's not much though. Okay. Nah, that's too big of a company for me. Look at the market cap, huh? 30 billion? Keep on moving. Keep on moving. That's why I got all this conditional formatting here. We don't have to waste time looking at each one. Red, keep on moving. I don't care. What is that company? Bridgewater Bank shares? Nah. Okay, blue. That's an industrial. $500 million market cap. 813 buying. This one sounds kind of familiar. Construction and engineering. Oh, okay. This one looks interesting. All right, not a great looking chart, but that's not a deal breaker or anything. Back it up. Not that great. Quick glance at the fundamentals. If we look across, check this. So just look at this. Okay, what do we got? So we got this is okay. First, let's see the buying. 900K is no joke. Who bought it? Oh, they just moved. What the hell is this? Why is that did he sell it? They sell it to each other? Let's see this. What is this? As part of the reporting person's long-term investment strategy for asset diversification and liquidity, the reporting person sold an aggregate 50K in a private transaction to... There you go. Look at that. They sold it to each other. You don't see that every day. The per share price of the sale. Notice how they specify. This is why it's being sold. So that's the thing with insider buying. I always say this is that any insider buying is better than no insider buying. But insider buying specifically is more important if you see it than insider selling, because there are many reasons someone might sell, right? Maybe they want to buy a house or something like that. There's tons of reasons. Or they as a matter of diversification, they have too much. Their livelihood to a degree is already dictated by the company because they get paid by the company. So if they're selling, it's less. It's important to look at if you're tracking a company and it seems overbought and stuff like, are all the insiders selling 80% of their position and stuff like that? And if so, okay, that's noteworthy. But when you see this type of a transaction, like it's just a random 100K sale, that's no big deal. I'm usually not interesting that. Boy, you don't see that too often though. They sell to each other. That's interesting. All right. So this is already worth pulling up. I've definitely heard this name before. All right, let's pull it up. Fundamentally. All right, what else we got? $500 million market cap. Revs $1 billion. Sick. It's trading at a multiple of sales. Yikes. 2 times sales. Excuse me. It's trading at 2 times. Oh no, that's a good thing. Oh, I keep getting it backwards. Oh, I always think price to sales. It's sales to price. I did it backwards. So above 1 means you're trading obviously below sales. Light green there on the EBIT to EV. Okay. Operating cash flow, simple free cash flow. All right, so yeah, this is worth pulling up. Let's check it out. Taking a while, huh? Oh, here we go. Okay, so first I'm going to add DLTH, track it. Yes, it's already tracked, but add it to the watch list. Yes. Boom. And then submit. Boom. All right, what do we got? And then here we want to track this. No. Submit. I mean, was it like a merger or something? Doesn't matter. Yeah, Franklin Templeton, so it'll be picked up elsewhere. I could just do that while that was fixing. All right, I got 2 more to go, but let's get back. All right, what do we got here? Okay, pretty stable revenues. That's. Oh. I was gonna say that was super stable revenues. I gotta fix this thing again. Eventually, they'll all get replaced, and there'll be nothing more to do, you know? I feel like I could change that too. Could you just say if it's not blank? Okay, what do we got? Growing revenues. Solid growth. Is it levered up? It's not even that levered up. It's levered up, but not crazy. It's marked up as safe. What? Purple and green back in the day, no longer. Dividend? No dividend. The price is 16. Historical earnings maxed out at $1.40. So whatever it is, it ain't stupid cheap. Some positive simple free cash flow. This kind of sticks out. Maybe that's $3, but it just seems like a one-off. All right, so this isn't stupid cheap, whatever it is, but let's figure out what they do. What do they do? Provides technologies to maintain, rehabilitate, and strengthen infrastructure in the U.S. It operates through 3 segments. The company offers various solutions for rehabilitating and maintaining aging or deteriorating. Wow. Oh, so it's kind of well, people always talking about like investing in infrastructure and stuff, huh? Boy, their business description is like exactly that. Where's that chart at? It's just not that cheap. It's just not that cheap. All right, let's keep on moving because we're here because of the insider buying, and the insider buying was just a transfer between the two. I mean, it's got some interesting numbers, but it's nowhere close to being cheap enough, and it doesn't look like it ever has been. You had 1 week. Nah, keep on going. It's not even worth tracking closely because it doesn't look like it ever gets all that cheap. Baker Hughes. I did see that big Baker Hughes purchase. Oh, I missed the Maxar. I was only 68K. Okay. Oh, I think I trimmed the Maxar a little bit too. No, I didn't. Did I? No, I don't think so. FTK. Oh, we already saw that insider buy. Anything here? Service Source, IT Consulting. No, nothing lit up or anything anywhere. Harmonic, Raven, B. Riley. We keep on seeing those names pop up over and over again, but that's not our cup of tea. Camping World, he bought more. Odyssey. All right, so nothing. All right. Okay, now you know let's do weekly movers. See this? I feel like this should be like the Friday thing. Is what the hell moved? Oh, GME sick. That's sick. Oh, add another thing to the list of the positive attributes. Top weekly mover. Naturally, right? I mean, that one's kind of an obvious one, but I forgot about it. I mean, on a kind of a tough week like this, people are going to see it. Yeah, what were the top, like we just did, right? There you go, 40% on the week. That's no joke. It's the best one of this bunch. It's one of the best performers of the whole week. Legitimate best performers. These other ones don't. Is Valaris, are they bankrupt yet? They should be. Go with this one. I mean, this looks really good, right? Something going on there. I don't know what they do. What do they do? Oh, I don't have it. Wireless telecom. So that could be what Whiting. They're like they're bankrupt, aren't they? That's not their market cap. Is they still a market cap of 867? You're kidding me. They're bankrupt, aren't they? Look at this. No one cares about this. They could even be. What? Did they already? They already come out of bankruptcy? Oh, it's already out of bankruptcy? What? Boy, that was quick, wasn't it? Oh, Chaparral files for bankruptcy. All right, so that used to be a position that I'm like, nope, don't want this anymore. And then because I thought it would look real dire. Oh, sorry, I gotta pull up that chart. I didn't see that news. It's not even there anymore. Oh, there it is. Chap Q. Oh yeah. Oh. Look at the chart. Looked absolutely terrible. And I thought, you know what? And then there was some insider buying from some value funds, and I'm like, all right, I think I took a position. And then I'm like, and then everything started selling off. I'm like, no, I don't want this. It needed, the chart looked so terrible. It needed everything to go in its favor. And plus those value folks were like taking a position. I'm like, they're taking like an oddly large, watch this, strategic value partners, which I don't know much about. I looked at their website, but I thought, why are you buying so much of this at $5? And so, but then they stopped, and then they didn't continue buying, and I thought, red flag, because it's getting way cheaper, and I'm like, oh, they're probably in trouble. They may maybe they own the debt too. I don't know. Okay, so they went back here, but geez, Whiting's already out. Isn't that one that went like a little bit parabolic too, when everything like in early June? I think it did. The charts helped with that one too. They look super. They look at the fund. You look at the debt. It just never. It just so they're so leveraged. Some of these players. And it's like you want something. If you're gonna do that, make sure you buy it like when everything's selling off. You're gonna buy a really leveraged like an energy player, for example. Otherwise, you want a little bit something else. Like that's why SandRidge and like FTK kind of look a little bit interesting. And FET is another one too that could be. What's that one doing? I did add to that. I might add again. It's holding up okay. It's holding up okay considering. These are speculative energy plays, but I'm like, if it works out, they could go up quite a bit. They just did an important bond exchange. We researched them on one of the streams. All right, so GameStop's going to be... these other ones are kind of weak. These don't even count. Whiting and GoGo, no one cares. These numbers are all messed up. Look at this, 20. It ain't up that much. It's because it was... This one's on deck. What the hell is this? A biotech on deck? I don't know what that is. What? What? What happened? I mean, I assume there was... why was this on deck? Oh, no, I don't remember this. Oh, shit. I had a biotech on deck, and it just went up 3x in one day? You're kidding me. What? Was someone talking about this? Shit. As you can see, I don't have that many biotech companies. Oh, I don't have a note anywhere? Do I have a note? Let me check that off and pull it up over in the universe. What? You ever hear that one? Let's get rid of these ones, too. Did that get submitted? There it is. I don't have any notes on it. Damn. I have no idea why it's in my... Doesn't matter. That's weird, though. I don't have any biotechs in a watch list. And then it's up 3x. That's just kind of funny. I can't even call that a missed opportunity. But did someone talk about it? Let's see. It could be in... what's their name? What's that? Perceptive? It could be in their portfolio. Anyone talk about it here? No, not really. Let's see if Perceptive owns it. I have no idea. That's why it's important to take notes. I have no idea why that would be in the watch list. If it's a mistake or something, maybe it's a mistake. It seems weird. I can't remember. Doesn't matter. Kind of funny though, huh? Whoa, where's that last one? Oh, that looks so bad, doesn't it? I mean, it went bankrupt. What do you expect? Whew, dodged the bullet. Charts can help you. Who was it? Burry who said that? He's like, I feel like a lot of what I say, I'm sure other people have said. I can't remember anymore. You read so much, and then it all gets mixed up. I can't remember, but I'm pretty sure this is. I'm pretty sure it was Burry who said it. It was like the charts keep him out of trouble. I can definitely vouch for that. You're like, this doesn't look that great, and then it keeps you just don't add, or you don't go heavy or something because the chart's like just giving you a little bit of warning, or you do a stop loss. Oh, so I didn't mention that, but that position I added specifically on GameStop, I used a stop loss on it. Like I mentioned, it's a little bit of a different position because it's like as long as this trend stays in play, then this added capital can stay on. But if it doesn't, if the trend breaks down, then sell it because that's too much exposure to GameStop. And it's not like a biotech where if it fails, it goes down 90%. It will likely. I don't think that's going to happen, but it could. You're going to prepare for anything, but it would probably get triggered on its way down if people's sentiment started changing. So, so that's a good example of a position I handled a bit differently. Wow. Okay. So one of the best performers on the week in what turned out to be a rough week. Sorry, let me just check. Now I want to calculate how much was the market down this week. Just gotta check this real quick. I assume it was down, right? 3, 4, 2, 7, 3, 5, 10. All right, Marco's down 2%. I'm just curious, doesn't matter. All right, what else was up? That's what I want. I'm not so much concerned about what was down this week. What was that? Vera Bradley was up 40%? Shit. We missed that. That must have been up and on. I was up yet. Oh, it was up Wednesday? Because we spent a lot of time on GameStop. Ah, shit. Huh? That one looked kind of interesting, didn't it? Damn. What was the announcement? Just earnings? Hey, good call right there. Whatever, I've looked it up. It didn't appear super cheap to me, but JGL, $26 million market cap, forget about it. Tupperware, this one's been crushing it. I had heard that they were doing well too in this new environment. It's like a 10-bagger. I didn't even want to pull it up. It was in the portfolio one time, and then whatever. Oh, I should add that as a missed opportunity though. It's not as bad as some of my other ones, but a 10-bagger, and it was on my radar, and I passed on it. Wow, Rail's still holding up there, huh? This one's like, you ever check out Rail? It's that they got the rail cars and stuff, and boy, it turned out, I'm glad I ended up getting out of that one. It's not done nothing. It's like, they gotta liquidate those rails and stuff. Turned out to be a dog. Good. Good, not the good that it turned out to be a dog. It was good. What I did was just get out of it. Lembach, also a bit of a. Oh, it's up at $7. It's coming back nice. I've been invested in that one before. Colaris. Wow. Okay, so some things up. Bloomin', City Trends, Hooker Furniture. Hooker Furniture. Okay, because we got B-Set. Holy shit. What's B-Set doing? Tapering off a bit. Oh, yeah. I mean, it's a furniture store, right? But it's a brick-and-mortar furniture store. I'm sure they have an online presence now, but people buying homes, renovating homes. This is another way to play the residential real estate market as well. Shoe Carnival. Wow, some retailers up here. Okay, so this is I know people last stream people were talking about how some of GameStop's Best Buy is a peer, but some other peers, like some of them are doing okay in earnings, and so it could be a beat. It could be. It's not like everything's getting it's not like everything's getting crushed right now. Oh, Navistar. I owned that back in the day. Got a solid win out of it. I owned it back. Oh, look at that chart. Yeah, it never got cheap enough for me, though. I owned it back here. Watch this. Boom. Right there. It was one of my non-energy, non-materials plays, and I got a solid 4-bagger out of it. Did I get all the way? I forget if I got all the way up there, but I definitely got a 4-bagger out of it. Sick. But now it never got cheap. I watched it this time, too. It never got cheap enough. A TGB. Okay. It's more just looking at what moved this week, but it's not, GameStop at the top. I should have checked in on that. Nothing that looks super compelling to me, though. Anything with some bright green insider buying past month like Tilly. Oh, no, I've looked into that one. That one's not a good. Auto parts. No. $3 million market cap. Forget about it. Nothing with any insider buying. Tilly says looked interesting in the ports, but they're all retail. And I got so much retail exposure now anyway. This doesn't look interesting to me. Nothing really looks like what looks. I mean, there's a lot of stocks in the portfolio, but like what looks super compelling. I don't see anything here that I even feel like digging into. As the market sells off, like these are on our radar, right? We'll go, all right, let's go dig in, see how the fundamentals look. And I just don't feel like it right now. Who cares? Oh, yeah, Zoom was up big this week, huh? Damn, I saw that big pop. And what was down? I guess we'll take a peek at what was down. Oh, some big ones. Club was down. Shiloh, is Overstock coming back to earth? That looked like a bit of a short squeeze, huh? Yeah, so like this one hit 100. People talking about GameStop hitting 100, huh? So this one's kind of bringing it all back to GameStop. Jeez. This went from 3. Wow. Anyway, look at this. There's a little bit of a short squeeze, right? A little, to a degree. Not like what I would expect if GameStop did ever short squeeze it. I don't think it would be a short squeeze like this. I feel like it would be much more rapid. But it had a heavy short interest too. And look at this. This is probably what a lot of GameStop people goes from $3 to $100 in how long a time period? 6 months? Can you imagine? It looked cheap, but it didn't look this cheap. There's no way that this was deserving, that they're this much of a beneficiary from the new environment. I don't know how big the short interest was. Wow, can you imagine? $3 to $100 in 6 months? And it was a little bit on my radar, but I'm not like dig in on my radar type. I gotta list this as a missed opportunity though. Oh, I already have it here. You learn from the missed opportunity. I mean, and your failures too. Look at this. It was my second one on there. Oh, these were in different order. Well, I added this list after the fact. When I first started doing the stream, I kept on listing them in the thing, and then I don't know what order these are in. It's just as I come across them, I toss them down. For one reason or another, these were missed. I mean, some of these are in the portfolio. I added Michael's. I had Michael's and then sold and then added it back. It's in the portfolio. It's just I should have been bigger winners for me. Wow, this one's coming back fast though, huh? Oh, what about Wayfair? Holy shit. They come back to earth. For now, it's just been a couple of weeks. Yeah, this is the thing. So, sorry. Now I'm thinking about 10-baggers and stuff, right? This is. I don't want to tie. I don't want to keep harping on this chart at all, but this is unadjusted too. Pop back up for the dividend. Oh shit! This kind of looks not quite over yet. Let's get some time to be brave. I mean, this is kind of dumb. See, charts start to lose their. I mean, I'm talking about the importance of charts and stuff like that, but they start to when fundamental events are unfolding and stuff like this is such a vertical leap. Interesting. I'll still do it. What the hell do I? Who cares? Huh? Look at that. I'll put it wherever. Do you tell me where you want it? I'll put it right here. Put it right there. What story do we want to tell? What narrative do we want to subscribe to? Just in general, the trend looks like it. It kind of looks like it's turning. I hadn't done this yet. Oh, it's right there. That's the thing. You can do these. What do you want an actual breakout? Then you'd want to do it up here. Although I think it's more like right here. Let's do closing price. Now I'm just curious. Spare me a minute. Oh, this is monthly. Is that monthly? Oh, shit. Oh, that's why it looks like a different chart. What if I change this to weekly? Similar looking chart. So you see on the monthly, it's nowhere. It's not really close to. It's not even above 50 yet. Wait a second. Should I just change this to line for a moment? Okay, let's do this. So this is, see, you can do like a trend. You can do it like that. Look at how steep this is, huh? Then it's like right there. It's like right there. I mean, who cares? Who cares? I was just more what are other people picking up on? A little bit of a trend, but then it's more just, it could just be this downward trend like I was more looking at like this. So back in the day, and then it hasn't really broken through. You can do it however you want, but it looks terrifying. But importantly, let me just go back. Like this is the monthly chart. Like this is the monthly chart, right? Look at this. That's a little bit a gap up on the monthly chart. Here we go. Here we go. A little bit of a. Oh, I should have done this. Look at this. I know, because of the secular risk. I get it. I get it. Like, but I'm thinking if other people see this and they see it. This is more short squeeze stuff, though. Like we see that chart with what was it? Look at this. Boom, boom, boom. But people actually thought, I don't know this. For some of these, I don't know this, but do people actually think, how much of it is people actually think they're going to be gigantic beneficiaries of this new environment? I don't even know. I don't know the full story here. Versus short squeeze. But this was a heavily shorted company, I believe. I don't know the numbers. I'll tell you what, it wasn't 100%. I highly doubt that. And how much of it... So that's the thing. This is why GameStop's narrative is so important. People talk about short squeeze. Short squeeze is like technical reasons for a short squeeze of there's not enough shares, blah, 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 which is legitimate. But what you really want is that narrative shift. And then if it happens, that could take time. With a company like it, why did it happen so fast with OSTK? Why did that happen so fast? But with GameStop, could it happen as quick? I say that in one of my videos where it could take time. It could take time to unfold. But because of the short interest, couldn't that like light a fire? Oh, some people are saying so. Trey Daniel, Hyperbole Kid, just need them to allow all of retail to open. Trey Daniel, what do you think about all the people overlooking this gap up? Oh, Trey, you talking about GameStop? What do I think about all these people overlooking this gap up? Well, I'm not convinced that they have overlooked this gap up. It just happened. I assume you're talking about GameStop. And if you're not, I'm going to bring it back to GameStop. So nice try trying to talk about that. I'm just kidding. I'm not sure. Yeah, GameStop. I'm not sure it's been overlooked yet. You love the stock. Well, don't get too attached to stocks. Don't get too. It's okay to take heavy positions. Remember, there's tons of stocks out there, but I assume you just love the stock at its current price point. Well, if that's what we're talking about, and based on the size of the position of the Roaring Kitty portfolio, I'd have to say, I guess you could say the same. But I think my options are going to do wonders. They could. I don't know. Yeah, there's a lot. It's a tough call. I lean toward the same. I mean, I have some too. Yeah, we'll see. So I don't think it's over. I don't think the gap's been overlooked yet. Give it next week. Let's see next week. And then the week after. I mean, next week is going to... What am I talking about? Talk about Tuesday, Wednesday. Let's see what it does then. And then Wednesday could just change everything for better or worse, where it kind of... I assume it will either take off from there, or it's going to... What do I think? This is just guessing game now. Like, let's say, I assume it will either take off from there, or I assume it would it bounce back down and kind of come back to that $6.57 level, but now it's in a new plateau? Or I don't think it's coming back. Like, I don't think, I would be more surprised if it, let's go back to the weekly. Oh, we got 20 years out. Let's just back it up. Let's do 10 weekly. Like, I don't think we're coming back to sub 6. I don't think so. Something's up. Like then I'll feel as though I messed up. If we go back into sub 6 and stay there for like a month or something like that, especially with the consoles right here, shit, that would be what the hell's going on here? Then I'll have to what would they say during the earnings release that made that happen? Like that, that was never part of the plan for it to. That's why it would be so weird if it sold off and came back down into this little area here. Like this is I didn't do. We'd like to make some shapes here on here, right? Check this. Let's do some more shapes. Who cares? Huh? Geometry. It was doing like one of these. What do you call that? Some type of flag there. Trade Daniel. I have a little bit diversified and a few others. My sort of other side of the portfolio is in the game. Oh, okay. You got some other positions too. Yeah. So Christmas. I know people. That's a thing with GameStop too. Is that talk about physical discs, and so Christmas often comes up because if you want to buy someone a game or something, you usually buy them a physical disc, or a lot of I feel like parents and grandparents will buy gift cards. I've bought them gift cards to GameStop before too. And remember, they get the rewards and the membership rewards and stuff. And yeah, I wonder how that could play a role. I mean, it's a good reason. It's not a big part of the thesis, but that people want to buy physical discs for gifts and stuff like that is relevant. So yeah, you got this little. So this was kind of. So I was mostly looking at the flat trend line, right? But you get one of these things, and like this was bullish already. Like it was like a. What do you call it? Bullish flag? I got all my terminology wrong. I don't know. I don't. It doesn't matter. Although if technical analysts were tuning in, they'd be like, "Ron Kitty, stick to fundamental analysis." But this was bullish already. It was like if it can just break out. So this is like another layer of the bullishness. Be careful we're not suffering from confirmation bias. I'm truly trying to be as objective as I can. So if there's any technical analysts out there who look at this and say, "No, this could be bearish," let me know because I don't think so. And then we know the long-term fundamental bearish case, although it's not irrelevant. It's certainly relevant, but it's mattering less in the short term. I think this looks really good. Is this weekly? This looks better than just a clean break of that $6. I mean, both are relevant, but this looks even better. Boom, 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 boom. Can you get the boom, boom, boom? Look at that down, ticka boom, boom, boom. You know that song? What were some other ones? There were a couple other like what kind of Wayfair was one? There's different types of squeezes. You know what I mean? I don't know enough about that. Trey, I personally love buying my games at GameStop because it's just a solid experience with everything I need. Plus, I get new release games before any digital purchasers. I'm hoping we push on the shorts here and straw breaks the camel's back. To your first point, yeah, lots of people buy. It's funny. You're supposed to talk to your family and friends and see what they do. I talk to my family and friends and they'll download. They download games. They're like, "Oh, you're crazy. I'm like, no, you don't understand." But this is a case of then I'd like, all right, let me try to do some research here, what other people are doing, and then yeah, some people like buying the physical games too. So one thing too is that heads up, there's going to be a larger slate of games, but also they could be more expensive than they've historically been. First of all, there's size constraints for downloading games and stuff like that. That's a small risk. But wouldn't you think that if games are more expensive, more people are likely to buy, especially because of like if they're more expensive, it's a bigger purchase for you. You want some resale value to some degree. Not everyone can afford to just download games and then throw it away. Unfortunately, not everyone can afford that. That's the reality of the world. And not everyone has Amazon Prime and all this stuff. Like some people some prefer to shop at GameStop and like for these reasons. And some people want the used games. They either want to buy used games for cheaper prices or they want to buy a physical disc so they can resell it, play it for a month and resell it. Like that's real. That's real. That happens. And people will still do it. So I bring this up because I had heard some rumblings this week that games might be more expensive this time around. And then I'm like, oh, well, might be more people doing used games. And another thing too is did you see that thing about Nintendo and the new Mario Kart thing? Ah, shoot, hold on. Oh, sorry. I just saw some people talking there. But this Mario Circuit thing here. Check this out. Hey, I've watched videos on this. Oh, this is taking up the whole screen. Hey, this is kind of fun. Hey, can you hear it? It's only a minute. Yeah, doesn't that look sick, huh? So I only bring this up because can't get that in a digital experience, I'm sure. There's two things to mention here is that first of all, I heard that they're gonna release this version like in this October. Yeah, this came out today. There's 1 million views. Oh, this came out today. There's gonna be like a new thing in October. That's another thing that people might be shopping for at GameStop. All right, let me turn this down now. We get it. But which is another Switch thing. And then I don't know if you've heard, but there's going to be an updated Switch that's going to be released. Like it's rumored to be released in March. Another thing people will be coming to store because Nintendo skews more physical. Just heads up, so it seems. Sorry, I saw some comments here. Daily O'Brien. Oh, and then to Trey's point, it could be the straw that breaks the camel's back. I agree. I think the straw that breaks the camel's back. I think I think this is it. I think we're here. Ryan Cohen. This is why if the shorts are still at 100%, I don't know what can I say. I think it's just maybe taking them time. I don't know to digest the information, and it needs more of a price movement for them to freak out. But the Ryan Cohen thing in this chart breaking out. We're one earnings call away or one major announcement away. Like we're right here from breaking the camel's back. Like this is the setup where you need the short interest to fall from 100% to, it needs to be way lower. It needs to be like to 30% or to 20%. And to get to that level, I think they need to track down some shares. I don't know. So I think we're right there. Daily, how about a Kodak squeeze? Yes, thank you. How about that? How about that Kodak squeeze? Okay, so the only thing about the Kodak squeeze was there was a fundamental event. Well, who cares? It's still a squeeze. Where they got didn't they get some government issued award? But no, yeah, look at this. That's a good, thank you, Daily. That's a good one that I forgot about. It went from $2 to $9. And I remember looking at this and thinking, I didn't. What I do is more important than what I think. I remember thinking, do you just add here and see if you can ride this ridiculous wave? And it turned out I don't regret not taking a position. I remember thinking this might be one of those crazy weird things that because it was so small, it takes time for people to catch up. Like it takes time. Look at how high did it get? $60? Holy shit. Can you imagine with GameStop? I mean, we're just shooting the shit. These aren't predictions, forecasts. You're just grabbing a beer. It's Friday night. Give us a little bit of leeway here. Can you imagine $60 on GameStop in 2 days? This is super. What's the market cap here? Oh, that ain't that small. That's not that small. 460. I know it's up. It's triple. So it was at 150. About. Shit. You could have. So I don't know. This is what I'm talking about. Look at this. This is a good example because when I'm talking about like I don't know. I'm no expert on like the mechanics of this type of market structure, this short level of interest. But like if you have this many shares short and then something happens or some announcement or if there was a bid or something, can't you get that like VW types? This reminds me of like that VW. Like this is a little bit similar to where it's bonkers. It's ridiculous. Like something went wrong. And could it happen here? I really don't know. I always lean toward no because but I don't know enough about it. I think $70 games for the next gen, which is an increase, right? I mean, they used to be $50, $60, $70, I think is a new level for the video games. There are a huge number of reasons to buy physical so that you aren't tied to the game and can't consolidate it, but they do differ. They do offer digital sales. That's right. So I tried to cover, in one of my videos, I cover all, and most people know this. Many people know the different reasons you'd buy physical. There's a whole bunch of them, like you say, Trey. Looking out 10, 20, 30, 40 years, it's hard to imagine there'd be many. It would be more like record players because everything will just be so easily downloaded that we're definitely moving in that direction. It's just way slower than people think. And yeah, there are cases for both, but I just see way more benefits from physical to digital. AR is so neat. That's really cool. Can't get that in a digital, right? So just another thing. I just thought there was another thing coming out that a lot of people aren't talking about that GameStop could be a better. The more stuff coming out, the more gaming stuff coming out, especially physical type stuff that could be sold in a store, the better. Especially if there's tied to games and stuff, because people got to buy those games. It's more foot traffic and it gets people in the store. So that's why this was supposed to be a tough year, is because it's just, no one's coming out with shit, right? And now all of a sudden you're gonna have a ton of shit coming out over a 9-month period, and GameStop's gonna be a huge beneficiary, and that's why the downside is super protected. I think shorts are still 100%. Trey says, I think shorts are still 100% just because everyone is like the future is online only. Plus, look at growth of e-commerce, right? The short squeeze is like the DeLorean taking off in the future. Hopefully, GameStop does the same. Yeah. I don't know. Yeah, no, I think people still think that. That's what I say. There's some justification there, right? Because I think most people would agree that long-term future is probably more digital. So it's not like it's a ridiculous case. But what I take issue with is the 100%. Like there's some people, I was just reading someone who said like they won't even buy or deal in a company that or buy a company that has a short interest rate, or what is it, buy a company or short? I can't remember. Maybe it was short too, because they don't want to get involved in a short squeeze. But they won't touch a company with a short interest above 20 or 30%. And that's more par for the course. When you're at 100%, like, how do you justify taking that position? So even if they have legitimate reasons for taking a short position in this context of 100% short, plus Ryan Cohen just took a step, I don't think this is why I think when I talk about, like, I joke with the robots and stuff on Twitter. I think that it's because I just think that if a human were seeing this, that they'd be like, all right, I can kind of see what's unfolding here. But if you're a computer algorithm, how do you program in this stuff? How do you account for some of these fundamental events that are unfolding? Especially, it's difficult to incorporate in a model. It's difficult to model. This is why they struggle with tail risk. It's because it's difficult to model these types of situations. Think about it. How many types of companies out there are similar to in a GameStop type situation? How often is there a retailer out there that has like ongoing catalysts that come around once every 7 years? Like, is there a single one? This is a good question. Is there a single other retailer? I mean, I say brick and mortar retail, but they're trying to build out their omni-channel experience. But I just mean their focus is largely on physical stuff. I mean, like, is there any other example of this, of a company like, I mean, there's plenty of cyclical companies, and there's video game companies. Of course, they're cyclical too. They come out with things, but that gets priced in, the cyclicality of it. Whereas at GameStop, it almost seems like, it's like, how do you model that when you're dealing in the I don't know, maybe there are humans on the other side, and they're just what you say, Trey. They're just like really gung-ho, like, this is a ridiculous move. Cohen can't do anything. This is dumb. I'm not worried about the level of short interest because we're right. I don't care about the console. This is the thing. So this is my biggest issue with the shorts, is like, I'm a value investor, right? I'm talking a lot about the charts today and stuff, and really, because what else are you talking about? But the value of any security, of course, is the sum of its discounted future free cash flows, right? That's a fact. That's how this works. Now, in the interim, the stock can trade all over the place, well above what fair value is, well below. Of course, you can't even precisely value a company, right? Because there's so many variables that go into that. What the future free cash flows are going to be, what discount rate should use, et cetera, et cetera. But when I pencil through how much I think GameStop is going to have on the books, on its balance sheet books, right? Like its current book value, and I tried to ballpark how much free cash flow it's going to generate in Q2 and Q3 and Q4, and then looking out a couple of years. Like, I think that at base, forget if they can reinvent themselves. This is why it's so. The huge upside is tied to them reinventing themselves, right? Which is, I think the possibility of that happening is higher than a lot of people pricing in. But on the downside, like, I think that they're gonna earn a tremendous amount of free cash flows looking out 12 months from now, right? Like, so much free cash flow that their balance sheet is going to be that, in theory, they could make enough money in, like, pay out a dividend of like $5 or $10 per share in a dividend, and like then this price, today's price makes no sense. You know what I mean? Like, that's what I mean. The downside is protected. That it doesn't even make any sense of where it trades. I'm still looking at Kodak. It doesn't make any sense to me. And I guess this is my issue, because even if you're taking your short position because you don't have a long-term future, you still got to be scared shitless about the current book value, which now it trades right about in line with book value. Maybe it's a little bit above. But and the free cash flows they're going to generate over the 12 months. Because let's say, just say hypothetically, and I don't think that they will do this or that this is even part of the plan. Just imagine if they just generate all this free cash flow over the next 2 months. And I do think that maybe you think they can't. Maybe that's part of it too. The shorts don't think they can generate free cash flows. I think that's a mistake. But if that's part of the thesis, so be it. But I think they will generate free cash flows. And then they'll have so much on the books that it doesn't make any sense that you could still be short this, because they could just pay out one fat dividend, close up the business is over, and then that's it. But I guess the shorts are pricing in the long-term secular risk, the fact that maybe they might not generate that much free cash flows, and that even if they did, the management team would fumble and do an acquisition and screw it up. You're betting on a lot of things right there to go wrong. And I think even if the base case is like that, it's like worth like $10. You know, I'm like, I penciled through and I'm like, you need the business model to be dead right now. Like they'll generate nothing and that they're only going to burn cash. Like that's crazy. I think that's super crazy. People are still buying discs. Nintendo, they were 50% physical discs, roughly, like 40 to 50% physical discs. Like people are still buying discs in the middle of the pandemic. People quarantined and they were going to the store and buying discs. I'm like, and GameStop sells other stuff besides that, these consoles. So it just seems crazy to me from a value perspective, because I talk about that downside. It is really difficult to get to a fair value of $5 or less. It's really difficult to get there. And I say that in one of my videos, like it's highly, highly unlikely that GameStop is worth less than what did I say, 250 divided by 65? Okay, so that's $4, right? Because that was when I was doing the video. I'm like, it's really hard to get to a fair value less than this. And if it's really hard to get to a fair value of less than $4 per share, or $5 per share, how can you short that? You can short that, but like I know you don't always short on valuation alone, but like from the value perspective, that's insane. That's insane to short because of potential secular risks when a company has this much downside. And so even though I agree with you, Trey, that I think a big part of that short thesis is those long-term secular risks, and part of that is justified. This level of short, it doesn't make any sense because of the downside that's here too. If they had a ton of debt and they didn't have so much cash on the books and they weren't successfully, and remember how they were generating $500 million on free cash flow in the prior console cycle. I'm not saying they're going to get to that point. I mean, that's the current market cap, by the way. They were averaging about like 400 or 500. I included that in the video. Like, I don't think people realize how much free cash flow GameStop was generating during the early years of the last cycle. It's insane. Let me pull this out. Sorry, it's in the video, but I gotta see it again. I'll do this. I want 2016. I want this one. Look at this. You gotta see this shit. Is this GameStop? Oh, what am I looking at here? Look at this shit. Historical performance isn't necessarily an indication of future performance. Everyone knows that shit. Come on, we know that. But do people forget how much free cash flow GameStop generated? For the 12 months ended 2014, operating cash flow was $700 million. 2015, $500 million. 2016, $600 million. In their CapEx, forget the acquisitions for a moment, okay? I'm not saying that GameStop might not need to make some acquisitions, but their CapEx is and now it's even smaller right now, especially after cutting costs. Like, they just need to get a fraction of this simple free cash flow. Let's say like 20%, just 20% of it, giving all that's, and which I don't think is that crazy. And you just need 1 year of this, given where the market cap is right now, right? 1 year. This is what's the market cap? See what I mean? Like, sometimes I'll look back at these numbers and then I get removed from it, right? Because I start researching other stuff on the company, and then I look back on it, and that was when I started making the videos, because I'm like I've been invested in this so long. I'm like, let me just look through all these numbers, and I'm looking at stuff. I'm like, I'm like, this is insane. The assumptions you need to make to get to the bear case, and in particular this heavy short case, the assumptions you're making are so aggressively bearish that it's bordering insanity for me. I mean, that sounds strong, but that's how I really think. Is that what was I just? Oh, the market cap, 495, legit. Look, this is how much operating cash flow they were generating the first 3 years of the last cycle. That's not how much they're going to earn this time. It doesn't matter that at least gives you an idea as to how, and they continue to generate positive free cash flow. Even right now, I know the working capital management has kind of messed with things a little bit, but if you look at trailing 12 months, because of some of the moves they made, it still presents itself as positive free cash flow, but they're walking the line right now. But can you imagine, like right now, and their book value right now is, what is it? I know what it is. It's 435. I know that it's 435 million, right? I mean, now it's changed. I can't wait to see the updated balance sheet. Oh, the updated balance sheet is going to reflect. Oh, people are talking. The updated balance sheet is it going to reflect all these recent changes? Yeah, it will. So I hope if the sale leaseback happened in July, that'd be sick. I think it may have. We know they sold the jet and all that. What else? And the bond exchange is done. So hopefully this is all reflected. Well, I can't wait to see this updated balance sheet. Look at this book value, 435, and that's the market cap, 495. Now it's bumped up, and then the potential for free cash flow is like. And then even if you use a fraction, I still get to like a really, what I consider a fairly conservative fair value of around $10. I see $10 and this is assuming no buybacks or anything like that. And I'm like, how are you this short at 7, going up against what could be like if you're short, a catastrophic change in sentiment. Number one, as we approach consoles, just as people are talking about it like that's I feel, although now it's proving like. We'll see. We still got a little bit of time, but that we were even where we were in August and September was kind of surprising to me. But maybe because of everything that happened this year, it kind of threw people off. But now with Ryan Cohen in there, now I'm like, you could have a very dramatic, sudden change in sentiment. And so that factored in with this downside protection. I'm like, this doesn't make any sense. It still doesn't make any sense to me. But then you still have the long-term risks and stuff. So, but see what I mean? When you start looking at the downside, the short position looks even more messed up. All right. Okay. Sorry. I just went on a little bit of a bender there. Losing track. Oh, a lot of people said stuff. Oh, it's Trey and like a switch refresh, I think. Yeah, there's a upcoming switch in the spring, so it's rumored. I think shorts are still 100% just because, we talked about that. Plus, look at the growth. I read that. Score squeeze. I wish I could be an activist. Trey says, I wish I could be an activist investor, and I would remake the GameStop stores and experiences like esports. Have you seen my Trey? Check out my video. They're trying to do some of this stuff. Check out that. I mean, and also check out the IGN. I mean, I check out IGN, their article on it and their videos that they have. They did a great job covering everything. But plus they teamed up with the Dallas Cowboys. Like, that looks sick. So you talk about an esports arena. Like, wouldn't that be sick? Can you imagine like a whole bunch of those around? You can't have too many of them because it'd be really expensive. But like a GameStop place where like you go to, I mean, you have stores inside there, right? But like it's like a place that people can continually go to for esports, right? So they can game out and just hang out, though. Like, it's kind of crazy that there's not more places larger places for people to get to and like do. Like, think of like regular sports arenas, right? Where people go to watch sports and I mean, just as spectators, really. But and I know like there's some of these out. There's some places out, but there could be like a go-to. It seems to me, and if there is, if I'm missing something here in the gaming world, let me know. But like a go-to. A store. I want to say more than a store though, like where you can game yourself, but you can watch other people game, watch people live stream, and again, just like I don't know, just like chill and just kick back and stuff. And so they're trying to do that, but that's an even longer term thing. But even their current stores, yes, their current stores, they're trying to redo them, trying to figure out what people are interested in. Just like everything's a test here, that's what they're doing in their stores too, just seeing what people are interested in. Trey says quants could never handle these types of stocks and the ping pong effect. People are betting against GameStop due to their reputation, which is sort of damaged element, but how many people are buying for kids and just Google where to buy games and GameStop comes up? So yes, I agree. So that's important. Like, I agree with you, right? And I feel like that's an important part of the thesis, but it's on the grand scheme, it's marginal, but I agree with you. It's like people they'll just Google, there's only one brick, and I always say this in the videos, there's only one major brick and mortar retailer dedicated to gaming. So when you think I got to buy a game, you think GameStop. You don't always go to GameStop. And yes, some people, maybe even you, might buy it on Amazon and stuff, but it's a mistake to infer that everyone does what you do. And I think a lot of people do that. I go, well, I download my games, so everyone downloads their games. And I think that's a bad inference. Okay, not a lot of people care about the reputation of the companies they invest in. So reputation's important. Well, you're not saying it. Not a lot of people care about the reputation of the companies they invest in unless it's just an evil corporation. Right, so reputation is important. Like in one of my streams, I talk about the importance of stakeholders, right? It's not just shareholders, right? There's other stakeholders at play here, and to create the most value for a company, right? Because people are always knocking like the Heston permit there for trying to create a short squeeze and stuff, which even, just a reminder, that could be a good thing for the company not so much a short squeeze per se, but if you got the stock price up at a more elevated price, then it's a good thing, because then people are more likely to give you capital or invest in you, either by way of loaning money to you or investing in you in the primary market. You know what I mean? Because then you get a positive story with you, and then it's a higher stock price, blah, blah, blah. It kind of feeds upon itself. But the reputation is important, because and especially with GameStop's case, like, their employees are really important. Like, they're knowledgeable on games and stuff, and it's important to have like everyone on board with them, because just all the different stakeholders, bondholders, shareholders, employees, customers. You want the in-store experience. Like, the most value is created when you satisfy all of these stakeholders. So in that regard, but yeah, I'm kind of going off what you're saying, Trey. I know that's not exactly what you're saying, but you can see how reputation can matter. It's important to have a good reputation, and it could have a better reputation going forward. You can always improve. For most companies, you can always improve the reputation. In GameStop's case, I think that's the case here too, where I hope the new activist investors help right the ship with management and stop them from. Well, yeah, that seems like it's going to happen. Right the ship on management and stop them from overpaying the CEO. Yeah. It does sound like that they're probably going to rein that in. And again, they have Burry's vote account. They have like Burry's support to a degree, which that's important. And now they're in the spotlight a little bit. I bet this stuff's going to be reined in, like SG&A and stuff. I think they're going to. That's fixable. It's not a big risk for me. And so Daly says, one thing that could help is that the PS5 is going to be backwards compatible too. Yes, exactly. Add another thing on there. Yeah, well said, Daly, that it's going to be backwards compatible. So I always talk about the fact that the consoles have disk drives, but they're also going to be backwards compatible. And to be honest, I don't know how much that adds to it's really hard to, put that into numbers, right? But it's hugely important, because now all those old games still have a place in this new, in this new console, right? And again, it's hard to pencil through how much of an impact that has, but I mean, that's just another thing GameStop has going for it, and all else equal, that's really good news. Oh, I think it's not confirmed yet, Trey. Oh, I thought it was confirmed. Xbox Series Trey says Xbox Series X is compatible with all the backwards compatible games, and Xbox One games too. The wording was most PS4 games. Not certain. Let me look again. Oh, now I'm curious. I thought they both were going to be backwards compatible. All the PS4 games that aren't VR, yeah. Not confirmed for PS3, PS2. Oh, okay. Oh, only for PS4. I see what you're saying. So the PS4 games will be able to play them. That's still important, right? Walmarts are getting those esports arena experience, yeah, but only limited, and they stopped rollouts because of the Rona. Oh, okay. They were trying it. Okay. Thanks for sharing. Trey was saying that Walmarts are getting those esports arena experiences, but they stopped the rollout because of the pandemic. I would say surveying a good group of 10 or so friends would help you get a better idea of what the consumer markets are like. Some markets are more open than others, and video games, yep. Yeah. So, I mean, you like to think that they're doing the right thing on that front, especially with these new board members and add Cohen in there, who probably have the type of vision required to right this ship. You like to think so. Look up an esports arena. Actually, that's a good idea. Trey says, look up an esports arena. Those things are sick. I agree. Even saw what I saw at the GameStop one. Ah, sick. That is sick. Ah, shit. See what I mean? I mean, see what I mean. You don't just like Google this. Looks sick, doesn't it? How many of these are there around there? Yeah, how many locations they got? They got 2. Oh, in-store Walmart. There you go. Okay, so this is what Trey was talking about. In-store Walmart locations. Sick. And there you go. Okay, good call. They've got like 10 or 12 already, I think. There you go. Good call. 3, 6, 9, 12, 13. Dude, nice work. Yeah, he nailed it. Yeah, 10 and 12. So I assume this is what you're talking about, right? Yeah, this is great. Perfect. They got more photos? How many? What do you got? 950? Oh, bumping up. Yeah. Okay, thanks. Watch. All right, I'll check this out some more later. How popular are they? Have you ever been to one? Has anyone been to one of these esports arenas? And if so, they look sick. And just the idea of them has always sounded sick to me. You know what I mean? It's just, I haven't been to one. Walmart stock could benefit from these too. It's so marginal for Walmart. Walmart is a gigantic company. Sorry. Someone else had said, and I skipped it. Haha, cool had said, what did you ask? What did you ask about earnings? Sorry, I skipped it. What do you think about Q2 earnings? Q2, yeah, Not much. I don't have any precise forecasts. Just quickly, but I think the stock price the next day will be up. That's all. It's really my only forecast. I think that people are going to start viewing what's unfolding as positive, and that we're in the midst of the. Yeah. Okay. I'll look more into this after. Thank you. Thanks for the heads up on that. Just to do a quick Google to see what's out there. Let me X out of some of this stuff. Okay, so they got some sponsors there too. Yeah, that's what you got to do. Okay, so somebody's out there, so they could follow this. I wonder how much. That's the thing. It's not so much about generating free cash flow or anything like that. It's about getting people in the damn story. Giving people the experience that they want. People love this. So Trey says I haven't went to one of these yet because I was going to go to because they rolled them back. That's what Trey was saying. They stopped. They kind of cut back on stuff. Same thing for GameStop's experiences too, right? Testing stuff out because what are you going to do? Social distancing. It's hard to do this stuff. I mean, maybe in a weird way it helps GameStop catch up a little bit. Nah, I mean, like I like everything's got to be put on pause, but GameStop still has ways to catch up on this front, right? Anyway, yeah, no precise Q2 forecast. I just think that people are going to start viewing everything more positively. And in fact, like I said, if it pulls back, if it pulls back to back to this $5 range, something's up. If it pulls back, that's the thing. I had a hard time even imagining it was below $4. I had a real hard time thinking about how it could. When it was below $4, this is why I kept on buying. I'm like, this doesn't make any sense. It doesn't make any sense that it's still below $4 right here. And so I was gobbling them up. And so now we're here, and now I think, what are we going to have a bat? It's almost like I don't even care what they report. It's just so hard for me, given that downside protection that I just went off on. The market has to realize that it's there. That doesn't go on it can go on for a long time. That value goes under realized, but this catalyst is so big. The new consoles is so big that I don't think the market's gonna it's time for the market to price in this value that a lot of value investors have been seeing for 12 months. It just can't. I don't think it can go on for much longer because we're so close. Maybe it could. Maybe it takes one more quarter. Maybe it takes that final quarter, but I'm not so sure. We'll see. I would just say that I think the next day after earnings, I think the stock price will be up, and I would say that especially if we fall below 5. If we fall below 5, shit. I'm really curious about what would trigger that. It'd have to be really bad news. I feel like, what's the really bad news? That they really really underperformed over the quarter, and that maybe their guidance is bad, or they don't have much of a good narrative, and if they didn't have that much consoles allocated to them, but I really don't think I don't think any of these are really likely, but it's possible. You can't rule it out. It's not like I'm not saying it's definitely going to be up. I just don't think that a major pullback back below 5. I feel like we're out of this box now. Just back up. Let me do this. I think I just did a box last time, right? Do I know how to do this? Rectangle. There we go. I think we're out of this. That's what I mean. So if we get back down, we're back into 650. I'm looking forward to that stream where we have to pick it apart and be like, what's going on here, and whether or not it would last too. How long could that? I'd have to be really wrong about my estimates too, and I've never been that wrong. You see, I make a ton of mistakes and I missed opportunities and stuff, but this would be the most wrong I've been about some estimated free cash flows that it went below 5 and stayed below 5. I'm like, what the hell? But now I just think we're so close to the consoles that whatever they say will be viewed positively. Trader said, I think GameStop has some partnerships with big peripheral makers like Turtle Beach. Could help for the tournament venues if they do that. I think yes, I agree. So partnerships, any types of partnerships are always good, like gaming partnerships. The goal should be, over the long term, right, to form a business where you can grow alongside the gaming industry, the thriving game industry, right? It's going to be gigantic. They're saying it's going to be 220 billion plus just a couple of years from now, 250, it's growing so rapidly. So one way they could do that, start partnering with everybody, right? Bringing everyone together, Turtle Beach and Microsoft and Nintendo, whatever it is, and the Dallas Cowboys, that could be a big part of it. I think if earnings, Trace says, are good on the 9th, even breaking even, that it jumps huge. That's what I think too, and I'm prepared to be wrong. I've said this on the stream how many times now. I've made my. Let's see where it's at though. The one caveat I might say. Well, no. I'm specifically saying. I should clarify this. If the price were still at 765, going into earnings, if the price were still there, then I would think the next day would be up. You know what I mean? Like if it like doubled on Tuesday, you know what I mean? It doubled on Tuesday and Wednesday. I'm not saying it's going to happen, but if it did, and then we're at 15, all right, well, then we're talking about a different story here, where maybe it's not necessarily going to pop the next day because it already got priced in. I'm not saying it's going to happen, but just so you know what I'm saying, I'm saying like from here, I don't think it could. Totally could. The market always makes a fool of everybody. He always makes a fool of me, but it seems unlikely we're going back to like 5s, right? I don't know what to say. Like, if it does, I'm going to look like an idiot. Which, you're going to see me look like an idiot on the stream so many times, so make no mistake. But, and if it did, if it stayed there, that's what I mean. Like, if it went down and stayed there for all of September and October, like, what is going on? There'd have to be something really bad that happened, because, and I don't foresee it happening. That's what would catch me by surprise. Partnerships, they could help for the tournament venues if they do that. Oh, I think if you have the Big Short getting in the stock, he knows what he's doing. Yeah, well, I think so too. Forget the Big Short. What about Roaring Kitty? Wait till the shorts find out. Wait till the shorts find out that Roaring Kitty is getting involved in GameStop. I don't know. Wait till they find out, right? That's gonna take off. No, I'm kidding. But so what I think I said this on the other stream though, Trey. What's gonna happen is I think what's gonna happen as part of this sentiment shift is that. Like, Barry's been involved with this for like 12 months, right? Like, once people start viewing things positively, then the story found a roach, not a cigar butt. Exactly, Trey. You got it, right? Roach, not a cigar butt. That's right. What's going to happen is that all these bullish things have been unfolding for the past year, including Barry's involvement. And then people will start being like, did you know Big Short Barry's involved in this too? And like, yeah, he's been involved for 12 months, but then it helps feed the narrative. Just like Cohen helps feed the narrative, what a legitimate bullish narrative. I mean, there's a real narrative here because there's a legitimate case from a value perspective that's undeniable. But as far as it's important what the story that gets the narrative that gets out there and gets passed along, you need a real story to get things moving. And I think even though he's been involved for so long, people say, "Oh yeah, Barry's involved. Oh yeah, Cohen's getting involved. Oh yeah, they did team up with the Cowboys for trying to get into this arena type thing to a degree. Oh, they are testing out some stores. Those don't look half bad, blah, blah, blah. You know what I mean? They just start viewing them more optimistically. But we'll see. So, and keep an eye out what happens on Monday and Tuesday, too, especially, see, now the stream's coming to an end. Keep an eye on what happens on, Tuesday and Wednesday. I think GameStop needs to make the pre-order and e-commerce process so they need to improve the whole in-store experience, but also the e-commerce, the whole omni-channel experience altogether. But that's what Ryan Cohen brings if he does act as a advisor or whatever. So they understand that that's what they're supposed to be doing. But keep an eye out on Tuesday and Wednesday what the stock price is doing, especially in relation to what the market's doing too, if it's holding up. And keep an eye out for as I'll be keeping an eye out for articles and stuff, news articles. Like is Barron's gonna write an article about this weekend? Like you could get some big people talking about it, or Wall Street Journal, or I mean, what if one of the big newspapers picks this story up? You know, there's a story here. If they pick it up, and that it just helps get the word out there. And I bring this up because if it gets out there, let's say this weekend or on Monday or Tuesday or whatever, and then it could get bid up even before earnings is announced, and then everything's looking good. So keep an eye out for that stuff. But yeah, so I mean, no stream on Monday. I'm going to pass on the stream on Monday just because the market's not open, right? But see you on Wednesday. I mean, next time on Wednesday I should just say that it's going to be a GameStop. It's going to be a GameStop stream on that one, right? I've been kind of saying it because GameStop discussions have been dominating these live streams, right? That's why I put the pictures and the titles on there, because people who are watching it, that's probably what they're watching it for. And for at least for a couple weeks, like but it's kind of front of mind right now because I think we're in like a 3 or 4 week period where this is happening. I think that's what I think. We'll see. But in particular, Wednesday, we know what we'll be doing Wednesday, right? So yeah. So thanks everybody for tuning in. Cheers. Hope you had a nice Friday night, and yeah, keep your eyes peeled for everything, huh? So good luck next week. I will see you next week. Have a nice long weekend. And thanks for the great questions. I always appreciate the questions. Always gets the discussion going and helps us think. It helps me think. I hope it helps you think too, just to think through some of these things. And it's yeah, it's fun. So, and have a good weekend. Cheers, Trey. Thanks so much. Cheers to you as well. All right, and have a nice weekend, everybody. Okay. Peace out. And let me get this queued up. Where do we got? Okay. Later.